so let me answer that myself. I mean,
yeah.
I would not have known 6 months ago how to buy gold or what the different ways to buy gold can be.
Right.
And because of you, I actually did buy gold, and actually it's been spectacular.
Right.
So I mean, just in terms of the value of what I call sort of actionable events, right?
Yeah.
6 months ago, I would not have known what the methods are for investing in, let's say, GLD like this.
Yeah.
And some of the other things that you've done have been more about the correlations between one area of an industry and another.
Right.
So you may not, sometimes, I'm not sure if other people here are as like action oriented in terms of learning something that you can use to act upon.
Yeah.
Some of the stuff that you do, like, the overviews of the VC guy from the last meeting.
Yeah.
I mean, that's very interesting. Right? It's human interest.
Yeah.
And for me, it's not very actionable because I'm not going to go out now and try to meet VCs. But it's still interesting to hear, what his perspective is, or how you met him, and it's exciting.
His
to see
investment
how you love
style,
it.
right?
But things that are actionable are, like I went to that money show, by the way. The money show was in Friday, Saturday. It was interesting.
Yeah.
The most interesting presentation was by this guy, Michael Turner, who reminded me of that guy who comes here often, but he's not here today. What's his name?
The guy that comes here often that's not here today. Naveed?
No.
Barath? Sachin?
Julio?
Oh yeah, JC. Yeah.
And he was basically putting up the graph of the 200-day moving average overall. And his assertion was, if you, generally speaking, take your money and invest when it's above the 200-day average.
Yeah. That's
the overall rule, right?
Yeah.
That's what Julio's been
Yeah.
touting a lot.
You're happy to see you.
It was kind of fascinating to hear that, here's someone who's making his whole 45-minute presentation
Return
on
to
that whole
11.
theme around looking at the 200-day moving average as sort of a basis of should you be shifting, into cash or into equities.
That's basically what we do in here, though. You know that,
exactly.
Right? Okay.
So, but what that meant to me was that what you're doing here is exactly what someone who's a professional investor guy, like this is a guy who takes your money and invests in it, is guiding a room of 100 people on that same sort of theme of education, which I thought was quite fascinating. And the same thing that Julio has been, describing, here's the 200-day moving average and how it compares to this. And I thought that was really fascinating. Yeah,
so what you're talking about is just strictly technical analysis, and it's applied throughout like institutions and stuff. It's nothing. The way I use it in here is pretty on par with what the big money managers are using it as, right? Where I'm not trying to recreate my own methodologies. I mean, I might have my own flavor in terms of like the way I read price action, but for the most part, it's the same as any other money manager that's out there.
Right.
And remember, this world is huge, guys. This world there's a lot of people out there. There's a lot of people playing this game. Going back to your VC example, right? So you said that it's not as actionable, but the insights about the VC that I met, this is the guy I met, right? To me, you have to kind of figure out how to make it actionable. I'll give you an example. So this guy's from Greylock. He's like the most senior guy there, 16 years at Greylock. You have to think about what their, you want to look at their past investments, right? Why is it important to analyze the VC market? Well, they previously, so I'm going to meet someone, they previously invested into LinkedIn, Instagram,
absolutely,
Facebook, Cloudera, Arista Networks, Okta, Palo Alto Networks. This is why I pay attention to them. I think it's, I mean, I would say it's super actionable, right? If we look at Okta is publicly traded right now. I think it's very actionable to kind of see that these VCs know how to pick the right products that fit the market really well.
Absolutely.
So that's why I constantly look at it from more of a software analyst perspective, right? It wouldn't make sense to look at the VCs for something like AT&T, unless you're looking at AT&T's venture capital arm. Yeah.
So, well, let me describe it a little differently.
Sure.
This guy who is a money manager, this is a guy, Mike Turner, just one of the many who he manages not a big amount of money. He manages about $75 million of funds and people, which I thought was actually seemed like a small number for a person. But what I'm saying is that this meeting resembles the same type of, if you call it quality, let's say, the overall intellectual discussion that he had in terms of an audience in a conference that's around investing.
Yeah.
So what I'm trying to say is a compliment. It's like it's saying that this room you're covering the same caliber of what other.
Oh, I hope so, man.
Well, that's terrific, though. That's great. That's really good.
Yeah. So yeah, it's cool that you got to see a real money manager and in person.
Here. And they're fishing for your money. I mean, they're definitely.
That's what they do.
They want you to put their, and he's got some.
Yeah.
His secret formula, right? For what he uses for his calculations and whatever. And if you want to invest in that formula, then I'm sure, I don't know what his fee is, but so anyways, I think it really reaffirms that what you're covering is incredibly consistent with what other financial professionals do.
Yeah, so I like to keep saying that this is an alternative investment club. I know there's some new people in here. It's not a traditional investment club. Traditional in a sense where they only talk about stocks and bonds and real estate. In here we talk about alternative investments,
right,
which would fall into stocks, bonds, real estate, but stock market derivatives, right, or derivative contracts like futures and options. And then we'll talk about venture capital. And then we'll talk about private equity. We'll talk about small business acquisition. We talk about technology and its influence on the human culture and all that too, right?
Absolutely.
Where the direction of the world is going next. So I mean, at least in here, I don't even know if it's an investment club anymore. I'm just kidding. But I try to look at many dimensions and just see how it will fluctuate or influence asset prices tomorrow, right? Because if we know Generation Z is coming up online, and their consumer habits is on the mobile device, then maybe it's better to build a business on a mobile device than a physical one, right? You were just talking about JCPenney, and then you were asking the girl in the corner over here if she shops at JCPenney, right? You got to think about how consumers are evolving. I was just talking to Ashish today about just like being in a high multiplier market. Like, do you guys ever go and say like, oh man, that stock is just too expensive, it's overvalued?
Absolutely.
All the time, right? But then, like, no one thinks about, like, yes, it's overvalued. Does anyone get what I'm saying? Or we have a chair right here if you like, or there's one over here. Do you get what I'm saying when I say yes, it's overvalued?
Like the Beyond Meats, like spectacular potential but overvalued.
Yeah. So I'll run a screener for you right now and show you the overvalued securities in the market today that are of substantial size. So I'm going to do over 2 billion plus, and I'm going to jump over valuation. And I want to see every company in the markets, in the stock market today, that have a high price to sales multiplier, right? Meaning like it's overvalued. And you guys don't want to buy overvalued, but I'll explain why I'm like, yes, it's overvalued, why this is a good thing. So if we look at it, the highest overvalued company that's greater than 2 billion is this Chinese company, right? I don't want to emphasize on that company specifically. I just want to show you the industry. It's mostly biotech.
And Zoom.
Right? And Zoom. So let's scale this up to something a little bit more quality. Let's do over 10 billion. What do you notice the industry are mostly? Like you see quite a bit of software, right? Software. Right? Do you see why I'm calling myself the enterprise guy for enterprise software? So there's a reason why I say yes to overvaluation, right? You always have to think very intelligently as an economist, right? It's all about overcrowded situation. Like I think one can make a lot of money from just figuring out when there's an overcrowded situation. So let me see if I can think of an example of an overcrowded situation. Everyone today is on Facebook, right? It's overcrowded. Everyone's online on Facebook. And so you're seeing like one side, the crowd's right here, right? And then you're seeing an emergence of like, social consultation on people who are depressed from overusing social media. It creates opportunity on the other side, right? Just like the simple example I always use is the venture capital investing into Coursera and Udacity, where all the students are paying over expensive education and they're investing on cheaper education with leading knowledge. Right? So it's really about finding overcrowded situations. You see this in stock prices too. Like I think that Beyond trade was just overcrowded. Now it's starting to break down. So Beyond's starting to look pretty interesting. But going back to this example and why do I say yes to overvalued markets? Can anyone try to guess why I think it's a great thing? I mean, you're like, oh, short it, right? Yeah.
It's overvalued, but eventually you believe in the fundamental and it's going to catch up later.
So I'm thinking like beyond finance for an overvalued situation, So I just showed you with 2 quick scans, right? Most of it, the industry is biotech, and then the other one is software, right? And we had a discussion in the chat yesterday. The reason why I like that it's overvalued is because the market's willing to give it that overvaluation, right? It's the market itself that's saying, we're gonna pay 50 times, 100 times for this asset. What does that mean? If the market's willing to pay 100 times for this enterprise software asset, and I live in Silicon Valley, who I could, raise a team of engineers to create a high multiplier asset and sell it to the market, why don't I do that? Right? It's just like a commercial real estate person. Oh, like commercial buildings are expensive. Well, it's expensive, but I know how to build it from scratch. So I could capitalize on that thick margin. So overvaluation is actually pretty, it's a good thing in my opinion, if you know how to capitalize on it. Do you have a question? Oh, yeah.
Yeah, I'm good at that.
What was the question though, if you wanted to share?
I mean, nothing else. Just that.
Okay.
For the rest of us, what was your question?
What?
For the rest of us.
you wanted another question too. Yeah. So, because I mean, like, okay, we had this discussion in the chat, right? And we were talking about what's the quickest way to 100 million, to make 100 million. You're not gonna earn 100 million realistically. That's what we were talking about. Like, can anyone in here name me like a job that's gonna give you 100 million? Right? It's no, like, and then think realistically of like the people who actually made 100 million. They either invested early into some asset, some high multiplier asset, or grew some high multiplier asset, like Amazon growing AWS, or Mark Benioff, CEO of Salesforce, growing Salesforce. They grew a high multiplier asset over a period of years. That's how they became 100 million. I just can't. I mean, the other one would be like Justin Bieber. He's worth 100 million, right? But he's worth 100 million because he commands a crowd of like over 50 million. Right? I think more than maybe 100 million people know him. I don't know how many subscribers he has on YouTube, but that I think that's how you get to 100 million. You have to own some sort of high growing asset versus owning like a low appreciating asset. So for example, let's say as a real estate agent, I build a real estate business and I try to sell it. It's not a high growth asset. It's a solid business asset that I could buy from anyone else. I could buy another real estate agent's business, but it's not going to go for 50, 100x, right? So if you want to optimize your time because you have one life, how do you want to optimize it? Right? You want to build the highest performing asset class. And so we were talking in here. If you want to give me, I mean, I don't know if you guys like this topic. I could switch back over to finance real quick if it's interesting to you, because it's what we're talking about right now is technological valuations or business valuations. So we're still talking about business, and this still helps you analyze stocks. But I was drawing earlier and saying like, there's things about a high multiplier 50x plus asset class versus something that's like 20x plus asset class, and then over here is like 5x plus. So you guys understand the 5, 20, and 50x? Meaning, if you grow an AI company, it sells for 50x. If you grow a real estate agent business, it sells for 5x. So what's worth your time if you have only one life and you want to optimize your time? It makes more sense to grow an AI company because you're just going to get 50x, right? But that's from a valuation analysis. If we analyze just the human capital that exists in there, right? If you're building a real estate agent business, what type of audience are in there? Typically like mom and pop, shops and stuff like that, or small businesses, right? But if I want to build what's the type of audience in a 50x market, in a 50x ecosystem? Data scientists, machine learning analysts, deep learning people, people with PhDs, right? Because they create a 50x plus multiplier asset. So as an investor, how do I make 50x? It makes sense for me to figure out how to invest into like venture capital or AI or whatever. So I see the valuations in the stock market. The other spectrum would be biotechnology. So I've come to the conclusion from just the market intelligence itself, the public market intelligence, is that the most aggressive asset classes out there, high valuations, is biotech and software. Yeah, and there's a reason why. I might not be able to explain why biotech is aggressively a growth asset, a hyper growth asset class, but I can tell you why software is. Software has no inventory. Software is scalable with no inventory. So you have to understand that when you scale, right? If you scale a physical business Anyone ever try to scale a physical business? Because I tried. We tried to scale an e-commerce business. Right? When you try to scale an e-commerce physical business, this is what happens. So let's say you're trying to scale your sales, right, for a physical business. Well, this is what's going to happen to your expenses or your inventory. It goes up too, right? But for a software company, as you scale your sales, your cost is like that.
Yeah.
That's beautiful, right?
Exactly.
Now, the more beautiful thing would be where cost is like this. Right? As you scale, you get even less, and this is your thick margin right here. But I can't think of in what scenario can you scale where you would be experiencing decaying expenses? That would be godly. That'd be pretty godly. But this is the issue with physical businesses, right? So that's my explanation of the software business. So when I look at a company like Apple, right? I think Apple, I know there's some people here from Apple, but Apple, correct me if I'm wrong, they haven't introduced a new product for like a year now, right? Has it been a year?
Next month, right?
Is it next month?
WWDC happens in September. So.
But it's just like the most like the new monitor with like a fancier stand.
Apple Watch 5, but no real new category.
Yeah, no new category, right? So physically they're hitting a limit, and we were just joking that intellectually from a financial perspective I might be hitting a limit, so I got to kind of push it to the next level, right? So they have to perform too. So my philosophy or my investment thesis is that they will eventually acquire companies like Yelp. Right? They will transition to software. Hardware will become software, just because they need to prove to investors that hey, our shares are worth this much.
When you said software, you mean a transition to services?
No, services is different. Services is not software,
Okay.
right? So services is a real estate agent or attorney or investment banker. That's professional services, right?
Oh, what? No, when I'm talking about Apple, it's the service
Oh, they're
the cloud thing or whatever you try to charge you.
Yeah.
That thing?
Yeah,
The
yeah.
subscription, is that
Sure. Yeah, subscription, internet subscription, anything internet
That's
is
the-
software
that's
pretty much.
software,
Yeah, anything cloud, internet, software.
So
So
they're trying to get some transition to that kind of business too, right? Is that they
if I was in the corporate, pilot cockpit of Apple, I'd say we need to shift over to software, consumer software, massive internet consumer software. And you see that with what their entry into Netflix, right, Apple Video, Apple Movies or whatever, right? That's software.
Right,
Entry into financial, a credit card.
right.
But I think the bigger game is actually consumer payments, right? Which is pretty big as well. What's the other one? News media. That's all software. All their new offerings are basically
So
software.
they're trying to do that.
Yeah.
Right.
So if you're going to build a consumer internet software business, how do you defend your ecosystem, right? I'm not saying I work inside Apple. I'm purely an external analyst, but I could tell from what are the pain points, right? I think the pain points is declining iPhone sales. They don't reveal the numbers anymore, but I think they still show the numbers, the sales numbers. So I think we had a comment real quick. Any questions on that though, guys? Can we go over the GE Enron portion? GE tried to capitalize on high software evaluations by spinning up. Wait, who's this? Oh, I'm not gonna. Okay, all right. Weird question. So, what was I saying?
Well, with Apple, you were saying. I mean, Apple's a fairly proprietary company, right? So if you look at how many people have an iPhone but use a Microsoft, Internet Explorer on it? It's like almost zero, right?
Yeah,
So I mean, it's a fairly even like with real communication services or even some of the more advanced WebEx XML type services. They would kind of lock it down.
Yeah.
So if you own the base, everyone's got a freaking iPhone.
Exactly.
You gotta persuade
Exactly.
someone to either buy more of that iPhone, i.e. iPhone 11, or now that I got all these things out there, you got to add value to the uniqueness of the software on this device and get people to pay for it.
Yeah, it's kind of like the classic Comcast example, right? Like they own the infrastructure, but people are just building software on top of it or the internet on top of it.
The Comcast example would be, I got all these people that have connections to the home.
Yeah.
Now want to sell them more content, so they pay more money per month on that same wire for internet or for higher speed internet or for movies on Xfinity or others. So I've
Right.
got the foundation. Now I want to get more money out of
Yeah.
your wallet every day.
Yeah, I mean, so if you guys see the patterns of life, it's actually very fascinating. I think I should draw it for the people online. So I keep using a whiteboard. I know there's like 20 people online. There's seriously a pattern in life that I see repeating, and it repeats very well in businesses. Again, I was talking to Ashish, right? He's in the corner right here. So you guys know you're in Keller Williams real estate office, right? It's a brokerage, and it's basically a platform. A platform, they built up their network over time, and they built a platform, right? And then each agent sits on top. But no agents really work together. They could, like a partnership, but they really handle their own business. So that's the platform concept, right? That's the same thing with Facebook. Facebook's just a platform. Amazon's also a platform. It's a marketplace, right? It's a platform for sellers to hop on and buyers to hop on. And they're just getting the middleman fee by providing that IT infrastructure, right? But going back to venture capital, Sequoia Capital, Kleiner Perkins, Greylock, they're a platform too. Why, right? So their agents, their real estate agent equivalent is like Ashim Chandna, right? The guy I met right here. So, for example, this guy, let's say, they only recruit like from the best, right? From Ivy League or whatever, but he's basically a real estate agent on their Greylock real estate platform or venture capital platform. So these guys are venture capital agents, essentially. Right. And because they have that name brand, Greylock, what does that mean? All the entrepreneurs who have an idea, oh, I want Greylock to fund me, they go to Greylock, and Ashim's just capturing all the deal flow, right? Because they're a platform. So he's able to get all these entrepreneurs, 10 in a week, 10 meetings in a week, qualify it down, say, I like this idea, and this idea is Instagram. I'm going to invest $100 million into it. So it's always about the network. Crazy, right? The network grows into a platform. So I don't know if that kind of answers your question, but today with the invention of software, it creates, it reveals a lot of that platform stuff. And it goes with like, the technology stack, SaaS, software as a service, and then platform as a service, and then infrastructure as a service. So people like Amazon, AWS, Microsoft Azure, and Google Cloud, they're building the infrastructure as a service. And then there's like this platform, there's another middle layer of software, platform as a service. And then the endpoint software, which is like Salesforce. So there's a lot of money to be made in just this software stack that's not physical, but yet it's infrastructure like real assets. Isn't that crazy? Like we like in my opinion today, the way I view software is becoming like real estate. Where real estate is real, you can touch it. Well, software today mimics that reality because everyone has a mobile device. There's servers everywhere, data centers everywhere in the world. It just can't disappear at this point unless we get like a global wipeout. So to me, it's just as safe as infrastructure, as real assets, but it's software. It's like the best real asset today in modern day. Yeah. So that's why I pay attention to companies like Carbon Black and stuff, and like Pivotal, right? I don't know if you guys looked at Pivotal. We've been looking at Pivotal. This one's getting acquired by VMware or in early discussions. Right. So I personally hate this. So many times when I analyze the security where they just, like I know they're in a bad beat like Nutanix, right? I like Nutanix a lot, but it's just in a downtrend where I don't want to play it and lose my money. So, but I know it's like, if it gets too cheap, HP Enterprises is going to acquire it because they're partners. And HPE, they've got the money. So how do you defend against something like this? Where the stock, is just declining, but it gaps up. Next thing you know, they're in discussions of getting bought out by VMware. Because I know who would be the economic buyers of these companies. Very, very critical. So let's get started. Did I answer all the questions or the platform stuff? Platform is very critical, in my opinion. Okay, guys, let's get started over here. So today's number 129. I'm going to keep going. And it's going to be about stocks, markets. We talked a little bit about stocks. Markets, like the broader markets. Private equity, we're going to jump into KKR. You guys heard of KKR? They're the one who had that famous movie, Barbarians at the Gate. You probably watched that.
Cole Kraus?
Yeah.
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 I haven't seen that one, but I've heard of him.
Yeah, yeah. So they did like the biggest leveraged buyout in history. And then the last thing is probably we're going to analyze the GE Enron report that came out, right? It was like a super bearish report on GE. But then at the same time, there's so many mixed signals, right? You had the CEO of GE buying another 2 million shares, right? Added onto his 3 million share position, so he has like 5 million shares. And then you have one of the world's best hedge fund managers, Stanley Druckenmiller, also buying into GE. But then you got this guy who called off, Madoff, issuing a very bearish report. So we'll look at it briefly. I won't go into details, but I just thought it was like the interesting news of this week. So starting off with a quote, business is a combination of war and sport, right? I think it's the war part is like the competition, but we stop at the killing part. I just thought this quote, I know it sounds kind of aggressive. I hope you don't perceive me in a different way. I just thought it was kind of cool, so I wanted to start with that. But I know last week we didn't have a quote, so I added a few more quotes. One of my favorite CEO from my favorite company of all time in the world, Microsoft, be passionate and bold. Always keep learning, right? That's what we do in here. You stop doing useful things if you don't learn. And then the last quote is, in life and in business, you need to be good-hearted and trustworthy and to have integrity. This is the way to build long-term relationships. It is also important to be optimistic and to look at challenges as opportunities, right? So what we were talking about earlier, high valuations, 50x, that's not a challenge. It's expensive, but that's an opportunity to make a lot of money from the venture capital's end. And some news this week. You guys know this building right here, the Transamerica Pyramid, 600 million. It's on sale. Yeah, it's on sale. Why do you guys think so? I mean, right? If you think about it, who would intelligently respond first?
He who wants his name as a landmark, as an icon, right?
He who wants to buy it, you say?
He who wants his name as a landmark, as an icon.
Advertisement.
Oh, yeah,
They're not,
sure.
They're not offering the branding in the sale, I noticed. So it'll stay the Transamerican Tower.
Yeah, you could look at the actual listing too. If you guys know how, so you know how people in here go to Redfin and Realtor.com or what's the other one? Zillow and stuff to buy a home. Well, people go on LoopNet to buy commercial real estate. So this is the actual listing right here, and you guys could take a look at it, see what it looks like, and look at the brochure as well, which is pretty cool. Right? I know we talk about commercial real estate in here, but it's always brief. It hasn't been deep. To me, it's no different from looking at stocks like this, believe it or not. It's just stocks are a lot more exciting in terms of cash flow. When it comes to commercial real estate, it's very predictive cash flow. But the valuation methodologies is kind of all
So
the
if they
same.
sell the building, that doesn't really impact the leaseholders, right?
No, I think it's just selling. The new owner will determine what they're going to do with the current leaseholders.
Like the Salesforce building, Salesforce doesn't own it, right? Boston
No,
Properties
yeah,
own it,
Boston, yeah,
but
that's a
they
publicly
just
traded
are the
company.
biggest tenant.
Yep.
So
yep.
if Boston Properties sold that to the top, K Properties,
Yeah.
then
Sure.
it doesn't really change it. You can't look at the building and
Yeah.
see,
Yeah,
it doesn't
so
paint
I'm
the
sure-
color, right?
I'm sure there'll be T's and C's, terms and conditions in there that will be like hands off of the current leaseholders for like a year or two or whatever, right? You can't go in and do anything. So it's like, okay, we have this predictive cash flow for this period of time. But it's just the owner wants to liquidate. And remember, I study economic transactions, right? Why do you want to liquidate? If San Francisco has like the best venture capital in the world, right? Maybe they feel a little bearish. And this is someone that's at least worth 600 million, or at least 100 million, is making an economic decision here. So it's an iconic sale, if you think about it. But it's also, you have to pay attention that some very wealthy gentleman is liquidating a position and capitalizing either on a gain or a peak of a hot market. Because right now, the dynamics of commercial real estate, it operates just like a bond. So you know how interest rates are low, right? In commercial real estate, it's the same thing. Lower cap rates means higher prices. So today, I have the chart right here. National cap rates are at 6%. So this is the cap rate right there. So if cap rates are at its lowest ever, then prices are as high as ever, right? So some of the guys, my mentor who taught me volatility trading, also taught me about commercial real estate, specifically in retail centers. So shopping centers. I shouldn't say shopping centers, but you guys know something like, let's say across the street here is Cupertino Main Street, right? And you know how it's like mixed use with everything? So he taught me commercial real estate about that type of asset class, where it's like people go shopping and stuff. And he taught me that you could buy these at 70% occupied and then hire a power broker to occupy it up to bring the valuation up, if that makes sense. It basically means you're buying a piece of commercial real estate, like Cupertino Main Street, where only 70 to 80% are occupied. There's still 20%. So if you can find a business owner who could occupy it, get a triple net lease, which is commercial real estate terms, repackage it, sell it to an institution, that's how he made a pretty good amount of money. So that's event-driven, opportunistic real estate, commercial real estate investing. But right now, he personally feels that cap rates are too low, meaning prices are too high, right? So it's a dynamic. So currently today, cap rates are at 6%. So here's the lever, right? 6%, right? Just like interest rates are at 2.37%, now going down to 2%, lowered by 25 basis points. Well, this is the price up here, right? So the lower the rates go, the higher the price. The only time when it doesn't make sense is when we're lowering interest rates and home prices are going down. That's the scary part right there. That's the ultimate indication of like fear, right? Because it's like we're doing the right things to hold up home prices. Why are they not holding up in 2008? Because it's just too much of a collection of overcrowdedness, right? What are bubbles? Overcrowdedness. We were just talking about how overcrowdedness is opportunity, right? High valuations. That's like a derivative of overcrowdedness. Everyone's buying that market and bidding up prices. So you just gotta be, just a little intelligent about where the overcrowdedness is and how do you bet on the other side, either on a short bet or something of like an emerging business model, right? So again, we talk a lot about interest rates in here, how the Feds are lowering interest rates. If they lower it to zero, what happens if we have negative interest rates? Right? There are some professional money managers out there that believe that we might just hit global zero interest rates. I mean, it's globally negative right now, but they believe that rates could go 0 to -1, but not above -1. Because if you go above -1, the new form of businesses that will invent, the new market that will be invented out of that economic knock-on effect would be institutions who are willing to lend at, we'll say you -0.5.
Can you explain that? How can it ever be negative?
So they set the rate. They
But
manipulate.
isn't that like basically I'll lend you money and I'll pay you to look over it?
Yeah, man. So it's like, okay, so if it's negative rates, then that basically means the government will pay you to borrow money.
They'll pay you to borrow money. How do you? I don't understand that.
So is the bank out in Denmark or European company?
Germany right now.
Yeah,
They're giving
yeah.
0.5%
So what's-
negative interest rate. So
what
if you buy
stops
a
you-
mortgage, you pay back the money, but you pay less, 0.5% less.
So what stops you from going out and buying everything you can? And just getting
They're looking at your
So markets are warped right now.
stuff
They'd
all
say.
the time?
I just don't understand that. How fundamentally can someone lend you money and pay you to lend it? I mean, how are they making money by basically charging you -5% interest? How does that work?
I'm sorry.
No, they don't.
Maybe
No,
they
no,
don't
no.
want
So
to
the fact that they're thinking as if they invest that money somewhere else, they lose lot more. So they're stemming their losses, not making money.
So
One possible explanation, let's say I have a ghost town.
yeah, what?
I have a ghost town.
Yeah,
All these buildings,
Yeah.
nobody there, right? I'm the city.
Yeah.
I want to make money.
yeah,
I want to encourage a whole bunch of people to go there, and so they start whatever, buying, selling, trading, and I collect the taxes from them. Now, it is in my interest to go ahead and have those places occupied by people
Yeah.
to start real estate or to start transactions
yeah.
that will generate money from. So thinking a little bit further than just that very transaction itself, but the effect of those transactions.
Yeah, I see. It's a
Not
hard.
gonna work for a bank.
So
No.
It's like saying
so
I'll lend you $1 million and I only expect 900,000 back.
so it's not an easy concept. Every financial textbook. Okay, like this is seriously like. So college is pretty lagged, right? You send your kids to school today, they learn about finance. If the professor's just following the books, They're talking about interest rates at like 7-8%. Okay, the reality today is negative interest rates. So this is unprecedented times. 0 to negative interest rates. Let's say real interest rates. So I don't know. This is like it's escalated to a point where there's no textbook answer for this. We're gonna watch how prices play out, man. If people are gonna buy ammunition, then it's gonna be ammunition.
That sounds like a Twilight Zone episode.
Yeah. It's like it's totally Twilight Zone. So keep in mind, that's the news right there.
So,
Cap rates.
hey,
Sure.
I'm totally with Bernard on this. Like, I can't grasp it. To me, you can go down to 0. The second you go below that, you create a very unstable situation where if you have a $100,000 asset, take a loan out for $1 million on that asset.
Yeah.
So prices go up.
Well, the only way it
values
makes
down.
sense is if, let's say the government lends you $1 million and you invested in a business that they're gonna get the tax revenue on, so the net
Yeah.
is positive then.
I can see how the government would like it.
But I don't see how an overall economy can have a negative interest rate for any long period. I mean, it just seems
Yeah.
sustainable.
If you
have
understand inflation on like currency value, and then when they have a big inflation, then your actual interest rate, it could be like negative.
Yeah, I guess if
It's-
the business community of California said, we want people to invest in real estate, so we'll lend you $1 million as long as you buy property, which means you have to, hire a window company and tree company, all this other shit, right? I mean, you're spending more money, but I'll give you the money to spark and get it going.
Yeah.
But you're still going to spend more on taxes on the
Yeah,
products you buy,
yeah.
so I'm going to be ahead. Maybe, but it seems impossible that it's going to sustain.
It's a hard concept. It's happening around the world besides the U.S. today. The rest of the world have negative rates.
So
But they're
inflation is
negative- but they're
actually
negative
a
savings
So
rate,
for
right?
example,
Huh?
before
Ne-
they printed
negative-
$1,
negative
now they print
savings rate.
$10.
Like, they don't want people to keep money in the bank.
Yeah,
But
it's
not negative. Like,
yeah, it's forcing every money earner to invest into risk assets. So risk assets have warped into bonds essentially,
Wow.
right? What is known as bonds are now like stocks. Stocks are like bonds,
Think about
and so venture capital is stocks of what would be back then.
the interest rate actually the price will go to interest rate itself is the price of your funding supply and demand. So the government setting the negative interest rates is wanting to boost the economy. Means the government think in the long run it pay off. I just suppress a short-term benefit in order to stimulate long-run growth. It's a macroeconomy. You don't think in macro way, think in macro way. The whole economy. So I give you a negative price in order for you to borrow more, and then this money you will flow into the economy. It's better for business. They can have money to invest more.
Basically what you're saying is it's almost like saying, I'm so desperate right now to get the economy going, I'll lend you money at a loss, you'll invest it, and we'll better off later on. I mean, it's hard to believe that that's sustainable.
That's a short run strategy for government level. That's a short run strategy for the whole economy.
Right.
So the issue is that the monetary system's decaying. That's all I gotta say. Right? So they say that the grandma of today who wanted 5% rates, whatever, would have to get her credit rating. So she can't buy triple A bonds anymore. She has to go like the triple B and below. So the more junk type of bonds, if that makes sense. So hold on, I'm gonna mute somebody.
This is all energy walking in there.
Someone,
Little water.
whoa.
It can be advantage to go to the.
Someone's just
Right.
like at the store, listening to financial education.
Yeah.
So think about yields, right? So I mean, if you think about the decay, yields are kind of going like this,
Yeah.
right? But then it's at a point where zero,
Yeah.
or I'm sorry, negative. It's just gonna warp all the prices, and it's easy money, right? So I think stars are aligned for gold. Just straight up, like it's like, that easy probably. But
So why do they want to liquidate right now? Because if the interest rate is going to go down and the asset price is probably going up, so why do they liquidate right now?
It could be many reasons. So what you're asking is only on the front of like economics only, right? Like prices are gonna go up. Why are you selling now? They could be aging. It could be a family problem. It could be divorce. It could be anything. So, assuming it's none of that, yeah, there could be some upside here. Maybe it could be even that they bought at 100 million and now 600 million, and they want to take 500 million. Right? So you never know on the other side. That's all. Only the broker would know that. The person who brokered it. But just keep in mind that the monetary architecture is decaying, and it's forcing people to figure out ways to make money, right? And I don't know if you watched this one movie recently, but it's a movie. It's kind of like the movie Saw, but it's not as gruesome. But it's a puzzle. It's a puzzle movie where these people got locked in a room and the room started heating up. Did anyone watch that movie recently?
Escape Room.
Yeah, did anyone watch that?
Yeah, I saw it. Yeah.
So that movie haunts me in a good way, right? So in the movie,
no spoilers.
Damn, then I can't tell.
Oh, who cares?
Okay, as long as you guys are okay with it. Okay, so I honest to God, I believe like this is like the best way to approach life. So watch that movie, The Escape Room, and in the movie, these very successful and intelligent people, they got locked into a room and they have to figure out the puzzles to get out, right? And towards the middle of the movie, one of the girls in the movie realized that this is what they want us to do, right? We have to play the puzzle to get out. But she's like, no. What if you created your own direction by what she did was she knocked out all the security cameras so the game maker couldn't see what she was doing. Right? And so when they had to go in and troubleshoot that, these guys were going into the next puzzle game. She was still there acting like she was dead. But next thing you know, she gets out through unconventional techniques. So that movie haunts me in a good way because I see that with the way of life. Because when I analyze enough businesses in here, keep in mind I have access to like 7,000 stocks, which is essentially 7,000 businesses, right? I see which one is a highly efficient cash flow business model, and I think about, would I want to spend my time making this business, or is it more worth it for me to build an AI company? At this point, AI or software, investing in that segment sounds a lot more efficient and quicker to make money than if I were to go and build like a e-commerce FBA fulfilled by Amazon business. It just doesn't make sense, right? Though that's better than maybe a cafe because you're doing less work for more. But yeah, it haunts me. It haunts me in a good way because I would encourage people to do what she did. Because the 7,000 businesses I see, or plus all the business we analyze, I see a cookie cutter pattern, a cookie cutter lifestyle. Like everything is planned since day one, right? You're born and there's already cartoons for you to watch, to baby food for you to eat. To the day you die, there's already funeral services ready to give you a call when you need it, right? My grandmother passed away about 2 years, when I was teaching here, right, 2 years ago, and I attended her funeral, and towards the end when everything was done, right, there was one guy at the funeral. I'm like, who is this guy? He's here for the family event, but I just don't know who he is. Next thing you know, he said, everyone's done. They're about to leave. He said, if anyone wants to purchase the land next to her, it's about $5,000. And I'm like, oh, he's a funeral services salesperson. So you see what I mean? It's the reality of life is, there's a cookie cutter mold for everyone. And for you to not see it, I say watch that Escape Room.
What's the name of
The movie is called Escape Room. Is that right?
Yes.
Yeah, so I see that and it's opened up my eyes to kind of figure out to craft my own direction, right? Towards the end of life, make sure that guy's not there. Yeah, life is wild. Anyways, some miscellaneous stuff that I want to talk about. Trump called the CEOs of this was a news.
So the permanent building, do you see the trend in the near future?
Commercial real estate buildings?
Yes.
I don't look at the transaction. I think we would need like a CBRE broker to kind of give us insight onto that. That's a good question though, because the only thing I track is cap rates, but what I should also track is transaction volume. So if transaction volume is increasing to the downside, then that might be concerning for large buildings, right? Not so much smaller commercial real estate units.
But you said the cap rate is so low, so the commercial
commercial building price is very high, so it will stay
Yeah.
for some time, right? As long as it's there, do you see other commercial building sale on the horizon?
Yeah, like I said, I don't have the stats on that. But if you try to go and search for something to buy today on LoopNet, you're gonna see that everything is relatively still expensive. Because I know because I look, right? And the way I think about the consumer is, or the average person, let's say, is the moment this is people on average, okay? How people behave is with the technical difficulties of this stuff is people, when they make money, they will automatically go buy a home, right? But when home prices don't make sense from, if I'm gonna buy this investment property, rent it out, I have to pay extra every month. That's negative cash flow, right? It doesn't make sense. I'm betting on the appreciation. So I see that's kind of tight there. There's not much opportunities in residential. So where would people logically go next? They'll go to multifamily, right? But they won't go to industrial commercial real estate. It's very low competition. Industrial commercial real estate, healthcare commercial real estate, like health centers and stuff like that, like walls with like X-ray proof and all that. It's very specialized real estate. So I don't see them going there, but we're looking right here. If you look at, right here, 480 California Street, cap rate is 3.66%. So if you buy this property for, it's listed for 2.2 million, you make 3% a year, 3.66% a year of that 2 million. Not that great of return, because you could make a lot better money from owning a small business, but you have to work, right? Unless you're an automation specialist. So I'm not looking at this segment anymore. But the one thing I do like about it is the access. The thing about real estate that attracts me, one is it's a real asset, but you get access to leverage. It's a leverage purchase. You get nice margin. It's like stocks, like 7x margin.
You're also betting on the appreciation value, not just the 3%.
Yeah. So a very professional money manager, right? Felix, I forgot his last name. He was part of Barron's Roundtable. So he has exposure to like 100 million in commercial real estate, right? He had to go and short the commercial real estate stock index to neutralize his position, to be not so much net long, but net neutral. Does that make sense? So I'll give you an example. Let's say I own a lot of like residential real estate, right? And I know it's 2008 again, and prices are going to tank like 20%. Well, it did plus in 2008, but let's say 20%. Then I want to go and neutralize my position by buying a bunch of like options or insurance contracts on XLRE contracts to kind of neutralize it, if that makes sense, right? So that when my real estate exposure goes down, physical exposure goes down, my investment over here goes up, right? So it's always portfolio management. Very very interesting stuff. Like if more people just viewed commercial real estate as just like one unit that's appreciating like a stock up and down, but it also pays you a nice dividend of 3.66%, right? The difference here is like AT&T will pay you 6%, which is more than 3%, right? But the difference is you don't get leverage. Right? That's the main difference right there. This is leverage 3.66%, so which is nice.
What does that mean by that?
As in like you put down 20%, they lend you 80%. So it's actually higher return, right? But that's the beauty of real estate. You get access to leverage because the banking system is so used to lending to physical assets. Today, when I try to get a loan for an internet website business, they say we don't know this stuff. We can't really lend it to you. So now I have to go into like private financing and so forth.
When you buy stock, you have to pay full. That's what I think.
Yeah, but if you want to look at like let's say an online business, right? Because if you ask me from a millennial perspective today, you could buy a very profitable business for very nice cash flow. I'll show you some of the examples. So not so much this one. This one's selling for 26 million. But if we go down to something more affordable, right? If you want to buy a $1 million home today, $1.2 million home, and you want to rent it out, how much are you gonna pay each month? How much are you gonna pay? Like extra $500, right? Right? Assuming like depending on what you get your tenant. But look, you could buy. This is monthly profit, right? Let's say you buy a Fulfilled by Amazon for $585,000. You get $16K every month if you operate it correctly. And this is basically an internet business. And we could go down. We could go down further too. You want something cheaper, right? You could basically buy income. So 185,000 for Amazon fulfilled FBA, and you make about 6,000. Or this one, 160, and you make 10,000. Right? But you have to go in there and know how to do the due diligence. Meaning you have to verify the operations, the employees, the marketing, the sales, right? Are sales consistent, or is sales kind of like fluctuating? It's not commercial real estate where it's very passive and you don't have to actively manage it. But this one, we could look at the sales. We go in. It looks like sales went up. What happened here, right? It's probably very cyclical. Maybe around towards the end of the year. So this is like Christmas or whatever. Business is really hot. So it might be a very lumpy type of business.
Well, you're leaving out the labor side too, though, right?
Yeah. So yeah, I was gonna go to that next. So labor-wise, sellers spend about 2 to 4 hours per week responding to emails, checking on email, autoresponders, advertising platforms, and reordering products from the supplier. So if you ask me, this is not bad for that amount of income.
Is that per month?
Yes, per month.
Oh, that's pretty good.
Yeah, 10K per month.
But
Right.
do you need to like involve in the management?
Do you need to involve management? It depends. Every business is different. This one you might have to you have to read the business, right? Every e-commerce could fall into the same categories. I'll show you the
Are
categories.
you more of a passive investor? You just buy the business, or you have to get involved more in the operation?
It's so dependent. Like you could probably come across a website or a digital business that requires 10 hours and one that requires 1 hour.
So they provide the history of the earnings too?
Yeah. So you want to look at this $26 million business? Keep in mind, right? When we're in the stock market, we're looking at the penny stocks in the stock market are 100 million, right? Or 50 million, right? But then like over here, it's like this is small business realm, small digital business. It's 26 million. If this was publicly traded, it'd be a penny stock, right? So don't forget the size over here. When we look at the stock market, we're really looking at the biggest enterprises of the world. So I did digress a little bit into commercial real estate and internet. I hope that was interesting, but let's get moving on to the next part. We'll answer any questions if you have at the end, and my views on digital businesses. So this week, this was a nice headline right here. Trump called the CEOs of the biggest U.S. banks on Wednesday as the stock market plunged about 3%. So we had a volatile 3% move on Wednesday. That kind of got me thinking. Friday's action kind of surprised me, but I'm getting very defensive in the coming weeks, right?
Can you explain what you mean?
I'm getting very defensive in the coming weeks.
Meaning?
Meaning I won't be long bias on like stocks. I'll be playing like TVIX and UVXY, or I'll be positioning more into gold. Gold right now is slightly overbought. Sentiment's really high. I'm still buying, which is kind of weird, right? I think it could decline, but I'm still buying. I'm a disciplined buyer. My concern is that we'll get more global fear and it'll spike it even higher, versus like a technical mandatory decline. Right now it needs to decline. It's an overstretched rubber band. It went too high. It needs to decline a little bit from a trading perspective. But there's just so much risk out there that I feel it might not let that decline happen. That's just my thinking. It might just go sideways. But you never know. Let's see. So yeah, Trump called the CEOs of the biggest U.S. banks. Trump held the call with J.P. Morgan Chase, Bank of America, and Citigroup. The president asked the three men to give him a read on the health of the U.S. consumer, according to one of the people. The executives responded that the consumer is doing well, but that they could be doing even better if issues including the China-U.S. trade war were resolved, this person said.
Wow.
Yeah.
Genius.
That's like the power of access like you have, right? Very, very fascinating stuff. So let's get into it. The markets, quick update. So if you want to hear my thoughts, like kind of longer term thoughts, right? How I'm kind of playing this current market environment. I like gold. I like gold a lot more than ever now, just because a lot of the things are kind of unwinding. I really like emerging markets, but just not right now, because I think the dollar will rally. And emerging markets and the dollar have an inverse relationship. Emerging markets would be like China, India, Vietnam, and so forth, right? I like those economies a lot. I think they're pretty fit. So even
How about Latin America?
yeah, like Brazil.
Or, yeah.
What was that Brazil ETF? Yeah.
So bad.
Yeah. So some of these look good too. I like them, but not right now because I think the dollar could go up. And at this point, my view is I think the dollar and gold will go up together.
Yeah, I got a question.
Yeah.
It's maybe off topic, guys. It's
Sure,
really
sure.
interesting though.
Got your mind thinking, so.
Feel free to not spend much time on it. But I wonder if, so we're trying to get the dollar to go down. Chinese are maybe trying to get the yen, yuan to go down. Everyone seems to be trying to get their currency inflated.
Yeah. That's a good question already.
Would selling gold actually be a good idea at some point for some of these countries? Sell gold, increase supply of currency, decrease the backing of your currency.
So if you sell gold to increase the supply, so that means you have gold and you want the dollar, so you're taking dollars out of the system. That would increase the dollar, wouldn't it?
Well, if you're selling your gold, then you're going to decrease the
Dollar.
You're going to decrease the dollar, right? Because now there's no more gold backing of your currency.
So your question is, what's your question?
Yeah. So it almost seems like in 2008, I saw gold go up when everything else went down. So I'm thinking everything's up now. Maybe it's time for that to go down. Gold goes up. But
Yeah.
then I'm thinking maybe something's different this time. Whereas in 2008, all the countries had their back, so each other's back. So
Yeah.
maybe everyone wants their currency to go up. China wants the dollar's value to go up. So
Yeah.
they know they know the U.S. has a lot of gold.
Yeah.
So they start buying gold, so the value of gold goes up, and maybe the dollar goes up too. It creates some stability and some security in the market. And maybe this time around, since it's a trade war that's really at the root of things, one of the countries could pull a lever to dump gold and then kind of create a destabilization in the other for themselves or for maybe the other countries.
Yeah, that's a big question. So if every country is devaluing their currency, right? And you're gonna dump gold to reignite the value of the currency, then you really trust the balance sheet of like the countries around the world, wouldn't you say?
I guess it's where I don't understand it.
That's one of the ways.
So you gotta keep in mind the government's over leverage, like unprecedented levels, and money and there are a wide range of participants out there, from other sovereigns to other money managers, big time money managers. One that probably put a hit on Mr. Epstein.
Right. Yeah.
Right? What's the story on that? Like the lights went out and he made a scream or something? That's crazy, right? That guy is like networked with some powerful people. I'm not trying to go that way.
Probably in a bunker with Elvis.
Yeah, so it's hard because remember it's this whole society brought value, like recorded value of society, right? I don't know. Let's circle back to your question later, if we have time. So guys, I like gold. I like emerging markets, but not yet, right? Be aware that there's some headwind. But if we start printing money, then I think emerging markets will go really high, just like gold, right? Because cheaper dollar, emerging markets go up. And I really like value stocks right now because at the same time, if there's easy money, more easy money goes into the system. And especially these companies like AT&T are already paying a high dividend, or Oxy. Oxy is the oil and gas company paying like 7-8% dividend. It's Occidental Petroleum, the name of the company. Then I think as they start injecting more money, it's going to inflate these value stocks. But also the growth stocks, I don't know. The growth stocks are pretty sensitive right now. Growth stocks would be like MongoDB, but the value stocks are in great shape, I feel. Right? It's just an influx of easy money.
So you say like growth stock will go down. That's what you predicted.
Yeah.
Don't put my
Yeah. So I have a list today, and I'll show you the growth stocks. Like, I mean, a lot of my favorites are not really performing. So here's SAP, right? It's okay, but it's not as bad as like something like Cisco right here, right? Or VMware, right? And then I think Palo Alto Networks even. So these to me are growth stocks. You want to allocate away from them because they're just getting hit like crazy. Even Salesforce is kind of tanking down right here, right? And Salesforce is no doubt one of my favorites, right? But it just had a ton of consolidation activity right here, and the market's kind of decided below 150 right here. And so I'm thinking this 140 hold is actually really weak. It could go down further.
Can you go back to the Cisco graph for a second?
Sure.
So look at Cisco. They announced their results. They beat the revenue target. They beat the earnings target, but then they guided cautiously below estimates, and as a result, the stock tanks.
Yeah.
That's
So
the type of stock you want to own.
Yeah.
They also
It
had
is, but
They also announced layoffs.
Yeah, but layoffs are actually driving
it's a good
stock
thing.
up.
Yeah.
So, I mean,
Yeah.
it's not significant.
So-
They've got 50,000 people. 500 people is. It's not like half the stock is gone.
But it
So-
was happening too fast. They had some layoffs last year too, so that doesn't show very good in terms of the company strategy.
No, what I'm saying though is when you invest in a company, if you believe that the profitability of that company drives value,
Yeah.
that's a company that's driving.
You're
freaking
reducing
huge
expenses
value.
when you fire people, right? It's
But
a
when
good
you
thing.
keep firing too often, then it doesn't show confidence. in the
Yeah. So
company.
yeah, you're right. So the other side is explaining is that if you fire people, then there's no growth story,
Yeah.
right? So yeah, I don't think there is a growth story here. Just the way the price action is revealing itself. You see how the 200-day moving average, the pink line, it's
Right.
very real. I would advise people to have the 200-day moving average on their charts overlaid, just so you know when you're investing. It's looking pretty bearish. I mean, this is, for one, this company's not going away. It's just trading at a high multiplier value, 5 times book value, which is pretty high. My take is, I mean, there's nothing exciting about this. If you have shares and you could hold for a long time, I think it's okay. But if you have options, then I think it may be further downside. Yeah, the dividend's about 3%.
For a long time, you mean how long?
Hold for a long time, 10 years plus, maybe 5 years plus.
Forever.
Yeah. Well, I mean, 5, 10 years, everything goes up, right? Because money goes down, apparently. Interest rates go to zero, so money's going to zero, right? That's why you could strategically position yourself to really benefit from moving economics. You just have to figure out why the economics are moving. So I like value stocks, guys. I'll show you Oxy. Oxy's it's starting to look attractive, but it's very heavily in a downtrend right now, right? So this was I read in Barron's this week. I saw your Barron's. This is one of the favorites in there. So this is what the monthly chart looks like. It's very beaten down, right? And if you go year to date, it's pretty low. It's like more than 50% maybe. But look at this, 7%. Very little debt. Okay, they're profitable currently, and sales in the last 3 years have been ramping up, right? So this doesn't look bad from a shares play. This is not a options trade for me. This would be a shares play where like you just have like 100K you don't know what to do with. Let's say. Yeah, or you can put it in commercial real estate. So that's Oxy. The other thing, so growth stocks and momentum stocks have been hard to play lately. That still remains true. I'm bullish on the dollar and treasuries and gold. So treasuries have been doing good just because of lower rates. Advanced strategies will always be, will always be a good area to be in. Meaning like if you're more sophisticated, you know how to trade weekly options on S&P 500. You know how to short penny stocks. You know how to trade options on momentum stocks. You know how to do pivot trading or whatever. Those strategies are still good. It's the best environment right now for traders. Yeah, but just investors is getting a little tough. So guys, let's look at the dollar. This is what the dollar looks like right here from daily. Why do I have 2 dailies in here? I guess I probably pasted on accident. But dollar's been kind of going up, so it's hard on gold. And we'll take a look at that.
Yeah,
That's something you don't look at?
No, I do. The dollar's going up. At the same time, gold is going
Up. Yeah.
That seems pretty bullish on gold.
That's revealing. That would be a bullish convert. I don't even want to go there. It's bullish for gold, right? Because gold should, in theory, be weaker when the dollar appreciates.
Yes. But
So
it's very bad for Trump's trade war because
Yeah.
he can put a 10% tariff on, but if the dollar goes up 10%.
yeah. So Wednesday's market volatility was no joke, at least in my opinion. Did you guys laugh? I'm just kidding. I'm getting.
Which of those lines is the 200 line?
Huh?
The graph there, which is the 200 line?
The 200 line would be the blue one right here.
So it's still the S&P.
We're at a 5% drawdown on S&P 500 currently, right? Markets haven't really been appreciating for some time now. If you go to the S&P 500 or any other indices, and you just pull out to the weekly, It's really been sideways for almost 2 years now, or a year and a half, a year and 8 months, right? So it's just been going sideways, right? Versus like all the other years, it's been going up pretty well. So the last time we had the scare was 2015. So I'm just seeing, it could be volatility. A lot of people still feel that the market's going to go up just because we're putting a lot of easy money, right? Just because markets are going up, yeah, it's good for you, position, but it's very bad for people who don't invest because it's just destroying their income. It's not giving them any chance at all, right? And I'm sure anyone in here knows someone that's like, oh, don't play the stock market, it's gambling. But we're getting forced to play it now because if you don't play it, it's probably worse than gambling. I'm sorry, in their words, it's worse than if you're not playing the stock market, then you're basically letting the world of people who are playing go forward without you, right? You're getting poorer by the day from doing nothing. That's a scary part. I mean, real estate's not a bad position, but it's extended as well. Everything's extended right now. So I'm getting a bit more defensive here, looking at actively trading volatility as I anticipate further downside. If markets start to climb up, then I'll back off from the VIX trades. But that's where I'm looking to play right now. So if anyone's interested in that spectrum, these are the securities I'm looking at on the long side. So when the markets tank, securities like this go up. So the last time it spiked all the way up to like $80, and then the other one is UVXY. This is not a beginner's tool, okay? It decays, so you have to be aware of that. So this is the S&P 500 right here, above the 200-day moving average still, but below the 50-day moving average, which is the light blue line right there, and currently in a downtrend. So usually when I see this kind of setup, I'm getting cautious, but I don't really get bearish until below the 200-day moving average. But then maybe by then when it's below the 200-day moving average, it might be too late. So you never know. Candlestick analysis. We have a double bottom since Friday. So moving forward into the coming weeks, I'm looking at this to go above. It's still above the 200-day moving average. I don't want to see it below 280. If it's 280, then I'm getting very bearish, and this is going to be really good for gold.
So you're saying the SPY is above the 200-day moving average by a significant amount, pretty much, right?
It is, but it's below this orange line, which is just as critical, right? It's the other line that money managers look at.
Can you explain that?
Sure. So if you go down over here to Axel Merck's analysis right here, so Axel Merck's an actual real-time money manager. I'm not a real-time money manager. I'm a small-time money manager, but so this is his analysis, right? Same thing, S&P 500, same thing I'm looking at, but his is considered professional because he's been in the game. He's looking at the 50-day moving average and the 200-day moving average, right? The 50-day is the lighter gray, and then the 200-day is the darker one. So it's currently below the 50-day moving average, below this line right here. And if you're coming from a quantitative trading background, you're getting a little defensive / bearish. When it's below 280, that's when you get more bearish. But that's simply the technique. Let me know if that made sense, and I'll explain it to you. So the line that he drew right here is the resistance line. Remember, prior resistance right here, and then broken out resistance becomes support. Now that support is broken right there, right? So the next step is that it's gonna move down lower, which it did. It moved down lower, but it didn't quite test the 200-day moving average. I think in the coming weeks we will test the 200-day moving average and see if we could go lower. But in the long run, I think we're gonna get another scare, something equivalent to December, but we're gonna probably go higher.
So wait, if that line, can't point to it, the one that almost touched the 200-day, right to the left of that.
Yeah.
If that would have touched the 200-day, you're saying that it would be a sign that it's going to collapse, right?
I wouldn't say touch, but you see that the market's very respectful of the 200-day moving average historically, right? And then over here it's just like mixed signals, and then over here it kind of respected. Over here it did respect it, and currently we're right here. Right, so I'm following the 200-day moving average very religiously, but it also sets the general direction of where I view the markets are going. As you can see, if I were to use another color, let's do this color right here. Just looking at the shape of the 200-day moving average, what shape is that? It's a rectangle sideways, right? So for the most part, I think it's defining what the markets look like. If the 200-day moving average starts to turn, I'm going to get pretty scared. right? Because this is like a very slow moving indicator that everyone is watching. Everyone that's in the money management business is watching. If that thing starts curving down lower, yeah, they're gonna react, man. They're gonna.
So with that break, then you're gonna go down to 2400 like before, like December.
Maybe. At least that's how I feel. I might have a more bearish view, which I shouldn't be, right? At a younger age, you should have like a bullish view. But I'm kind of bearish.
Isn't that line going up? The black line, trending up.
It's slightly trending up, but it's. I mean, we're using our discretion to analyze it, right? Objectively speaking, yes, it's slightly tilted up higher, but I'm consolidating the look of it, and it's sideways. Yeah. So to me, we're in a sideways market. If you want to apply some wave theory, I have that right here as well. So Tony Caldero, he passed away, but his daughter is running the blog now. His view in the medium term is actually downtrend, and then their long-term view is uptrend. So long run, they think the markets could go higher, and that's just telling me that more easy money means higher market valuations.
So
But
long term is like 18 months.
how come what?
Long term is like 18 months or something.
A year plus. A year plus, but midterm is like maybe in the next 6 months, right? So that's the perception of that. So that's my analysis on the S&P 500, guys, and we like to verify all that. Real quick, looking at earnings as well. So I know this is harder to see, but we want to track earnings to see if the collective companies are profitable, right? So earnings right here have just been sideways. And if you back test this, you can look at earnings over here and earnings over here, right? And real quick, let me mute somebody. We have 30 people online. But I know there's some people online in the room as well. I'm just gonna mute some people. Yeah, so it's sideways, but I mean that might be the indicator, right? Earnings will go sideways before it starts going the other direction. So fundamentally, if I see earnings, you guys understand what earnings is, right? Are these companies taking home money? If they're taking home money, then the stock market will keep going up. But when earnings start turning down collectively in the aggregate, we're aggregating everything to make it easier. Then it gets very concerning. Looking over at NASDAQ, again, below the 50-day and 100-day moving average, I'm thinking this might go below 180, but we'll see for the next week. This is the essential analysis I have to do every week, just because this is, I mean, you want to get into this, like, trading stuff. This is what we do, right? So hopefully it's not boring for a lot of people, even though you've seen this like so many times. Someone like SK, I'm surprised you're still here. I'm just kidding. Dow Jones Industrial Average, holding on to the 200-day moving average. So as you can see, it really acts, I mean, if you know the 200-day moving average is a real thing, then you could trade around it, right? From a trader perspective. But I'm looking at this from a more, how does this all play out perspective. And then IWM, smaller cap companies, small capitalization companies. This one has a double bottom at 145 and is below the 200-day moving average. This one has been the worst performing one. So markets haven't been really giving a clear signal, right? Majority of the signals have been, out of 4 indices, 3 have been bullish, 1 has been bearish. So we'll continue to move forward with this indication we have here. Looking over at Japan, Japan's already below the 200-day moving average. Japan's actually looking pretty bearish. So from across the world, I'm getting a little concerned, right? Because if they get very bearish over there in Japan, this is the other major economy, then it's going to kick back to our economy, right? So what do we have right here? What's the setup? Stock markets are kind of heavy, right? Dollar is up, meaning maybe the rest of the world is afraid. Are they afraid? Well, we're looking at Japan. Japan's kind of pointing down. So I guess, yes, the rest of the world is a little scared. So that's Japan, and then this is Europe right here. Europe is kind of pointing down, but having support at the 200-day moving average, though this might not be an accurate 200-day moving average. If you pull up the Euro Stoxx 50, put on a 200-day moving average, I've actually seen it below this. So Europe looks scared. It actually looks like this right here. So this is the other major economy, Germany, the DAX, German DAX, also below the 200-day moving average. So the other major corners of the world are looking scary. So this is why it's kind of building my trading thesis for the week that's coming forward here, which is to be long bias on volatility, and short bias on stocks. So I think we might get some nice VIX moves, because VIX could like jump like $2.
You mean VIX could increase because of the volatility?
Like TVIX could just move like $2 intraday, and if you have like a couple hundred shares, it's not bad. It's not bad money. Yes, you can, but not on TVIX. You could buy it on UVXY. So catching a move like this right here, right? 22 to 24 intraday. That's not bad. $2. Even 100 shares be okay for some people. That's $200. Yeah, size up like a few $100 and UV, not bad. So I think that TVIX has an up bias move, so I'll be looking to play that in the coming weeks. I'm getting more active. I'm also getting more active in the short selling as well, and the put option side. We'll see. So this is the DAX, right? And then to show you guys the PMI once more, this is a recent PMI. August 14 was when it was pulled. So that was like a few days ago, right? So this is the August 14 PMI. As you can see, from a technician perspective, right? It bottomed right here, but it didn't hold that support, right? And now it's lower. So this just might be something kind of scary. The underlying manufacturing stuff is getting pretty scary. This is USA in the red. USA continues to point down. So this is something.
What's the US manufacturing index?
Yeah, the Purchasing Managers Index.
Purchasing Manager Index.
Yeah. So things are in severe decline. I mean, the U.S. isn't considering recession until it's below 50, but we're heading towards 50, right? Germany's already in recession right here, right? And then you have China and Japan, the blue and gray right here. They're at 50 and slightly below 50 already, right? So you got. I mean, these are the major economies, right? So Germany, China, and Japan, they're already hanging out below 50, and U.S. is heading that way. Right, and this kind of all started when we had that first initial dip right here. This is back in February of 2018, right? So I remember because I've been watching markets like every day for like several years now. February was when we got that initial volatility spike where all the volatility sophisticated instruments blew up. And then November we had another scary dip right here. I'm sorry. This is February. This is February, and then this is the November dip. Yeah, I'm sorry, this is February and this is November. Yeah. So that's what the markets look like, underlying wise. This guy I respect, he's on Twitter. This is his comment, I thought it was pretty interesting. So on Wednesday, right, when the markets dipped 800 points, 800 point drop in Dow Jones Industrial Average was the 4th largest in DJI history, in Dow Jones history. As a percentage, it was 3%. It's in the 81st place of percentage drops since 1985 of January. Earliest I could easily get daily data. This sort of financial reporting is equivalent of yelling fire in a theater. Fire in a theater.
Is it true or not?
Well, I don't know. We'll see. So this is the response in the VIX, the volatility right here. So I was playing volatility a lot this week. I mean, this is just me finding other places to play because the typical strategies aren't working. My typical strategies is to buy companies like Salesforce or Okta with options and just kind of hold the momentum. But now it's just like been choppy. So now I'm looking at like weekly S&P 500 or day trading volatility. So this is where the opportunities are for me. Let's see if this could go back above 20 is what I'm looking at for the VIX. And then this is the prior spikes right here. So February spike, right? And then the December spike. And then this was just recently. So we'll see. We'll see how it goes. Again, these are the instruments, TVIX and UVXY is what I'm looking at. It looks like a setup right here. It looks like it could go higher, but we'll see. We have to monitor the indices. Looking over at the FANGs, right? Are the FANGs breaking down? Facebook is kind of breaking down. I know a lot of money managers are extremely long on Facebook. They really like Facebook. I like Facebook too. Ashim is also very bullish on Facebook, but he is the VC investor that has the luxury who could handle a 30% decline in Facebook. He just has enough money. So for people who don't, we can't really play that. It is below the 100-day moving average, and I'm looking at 180 as support. If we break 180, I think we can move really quick to 170, where the 200-day moving average is. So Facebook get a little defensive, I feel. This is the message is pretty similar across all indices, right? Apple, I'm getting pretty bearish on as well. They don't really have a super growth story, and they're like a heavy titan that's getting just heavy because of like their valuation and being number one when everyone else is competing too. So I see some resistance here at 210. I think it could go lower. If you're brave enough to do puts on Apple, I don't think that's a bad trade. I'd consider that. We'll see. Amazon's revisiting the 200-day moving average. Again, the story is kind of boring because we're seeing the same thing over and over. You know, it's just we've been chopping around the 200-day moving average for a very long time. Markets have just been moving sideways. Looking at Netflix, so this is a revisit to the Netflix trade and what we discussed, right? So I think Sachin, you asked me about Netflix. Is it a good time to buy? Well, I think it played out the way we expected, right? So what you had here is a gap down right here in Netflix. And again, we're always looking at the daily chart, right? You have the gap down below the 200-day moving average, right? And then it went down a little bit more in the next few days and then retraced about 50% right there, right? 50% retracement is not really bullish, right? It acted as resistance, and then the next day it went down lower, and now one would even say it's even lower than before. It hit a really low right there. So Netflix to me actually looks bearish from a technician's perspective. From global dominance, I don't know. Maybe they have more
There was
users.
a report on NPR yesterday, I think, Friday evening.
Yeah.
They did talk about Netflix being, I mean, they are still the number one, but you have Disney, you have everybody else coming in, and their programming has not, they've had a few hits, but not as many as they expected.
Yeah. So I'm concerned. I'm concerned for Netflix.
So they lost, first time in 8 years that they have lost subscribers, net
Interesting.
subscribers this month.
Yeah. So if you guys are playing Netflix, I see this as a very bearish setup, right? We could even say it's a microphone pattern right here. You have a microphone pattern, so like sort of broadening. It could go back up, but it's looking very negative. And then this was like the falling wedge right there, right? But we'll see. We'll see how it goes. I wouldn't want to play Netflix on the long side. More on the put side, the short side. Looking at Google, so Google gapped up, but it's just retracing back down. So again, these big stocks aren't really moving. Microsoft still maintaining a solid uptrend line. Microsoft has a lot of underlying strong portfolio investments. I really respect them. Looking over at bonds, right? I mean, nothing new here. It's still appreciating. I think some people want to short bonds, probably, but lower interest rates causes bond prices to go up. So you could get exposure to the 1 to 3 year Treasury exposure by buying the SHY ETF. If not, then you could buy the TLT, which is the 20-year bond right here. So yeah, so this is the day they announced lower interest rates, right? So if you know this works, then in the future trade, the next time they announce interest rates, whichever direction, you could really pocket on several days trade out, which is not bad, right? Like you could have came in late right here at 140 and still get it to 146.
So you're saying it's going up because of the lower interest rates?
That's basically it. This is the bond price. That's the dynamic of it.
So Fed announced another rate cut, but it's half capacity.
Yeah, the market's really pricing higher bonds. It's insane. Like watching these money managers play. Emerging markets are down right now. It's hit below 40. But again, I like emerging markets. Ray Dalio also likes emerging markets, but you have to wait. You have to figure out your timing on your part. My timing is that I know the dollar is going to rally along with gold, so it's going to hurt emerging markets. So I think this could have further downside maybe, but I really like it for a long-term hold. Just have to time it. It's not ready yet. And then emerging markets, you have also Shanghai, right? So the Shanghai index is kind of bouncing off the 200-day moving average right here. And that's pretty much it. Looking over at precious metals. So any opinion on gold this week? How do you guys feel? I know some of you guys want to look at gold on the short side. I think that's definitely a possible trade. We have a bearish pattern setting up right here. I think it could retrace to the 20-day moving average. And if that fails, then we'll look at the 50-day moving average next. But trajectory-wise, I think long run, if you could just stay disciplined. That's why I have an investment portfolio and also a trading portfolio around gold. Though my trading one, I'm kind of sizing up a little bit more in gold. Could be bad, I don't know. But I'm pretty disciplined to hold. This is what I see for gold, guys. Silver is probably less overbought than gold. So I am heavier on silver now than I am in gold for trading position-wise. Silver I like a lot. So as you can see, it's been respecting the 20-day moving average very well. And then platinum. Platinum is just something I feel like if silver goes up, everything else is going to go up. So I figure I'd include that in there as well. Cryptocurrencies, I think this one's in a tactical downside, or it's going to have some short-term tactical downside risk. So be cautious. I'm still bullish on Bitcoin or cryptocurrencies. It's just not XRP anymore, right? The only one I look at now is probably Bitcoin. Just because I just don't clearly understand all the other investment theses and all the other product out there. And that's it. That's it for the market overview. You guys doing okay? Okay. All right. I mean, I guess this part could be pretty tedious and boring, but.
Can I do one more?
Sure.
Target. So Target has their X date on Tuesday next week. So is there a pattern on Monday to take the dividend and just assume it goes up more than the dividend decline?
Let's see. What do I think of Target?
Keeping in mind that Walmart just posted above Target expectations and Target's numbers were good.
Yeah,
overall.
yeah. So from a technician perspective, right, long-term wise, I think Target's going to be stuck in this range right here between 80 and 90. Reason being is, okay, we're looking at the monthly, right? So the monthly is a lot more robust in terms of the information it's telling us, right? And then obviously right here, this part, we had the November-December decline. So again, a market sell-off, this is something you want to keep in mind as you're holding Target. The market sell-off could cause Target to go down sharply. So that's where you might want to be careful, right? Currently, if I switch over to blue over here, we have a double top right here, right? So there's two resistance right there. And the last candle, the last monthly candle, we're not done with the month yet. So I have to see how this plays out. So this is not a clear indication. I think Target is going to be stuck in the 80 to 90 range from a monthly perspective, right? Because prior resistance right here now becomes support over here. So 80 will become support. And I think you saw that lower candle, right? That shadow right here, it bounced off the 80. So it seems that there's interested buyer at 80. So let's jump over to the weekly. Let's start zooming in and start dissecting what this security wants to do. So I just reviewed the monthly. Now I'm zooming into the weekly. The weekly is telling me that, again, there's resistance here and resistance here, and that's major resistance. So if it could go above 90, then I'd get pretty bullish. But for now, it's fighting really hard at this $90 level, and it could be considered bearish. But one could say that we have a reverse head and shoulders, which is kind of bullish right there. But what do I see? The only information I have really is right here and beyond. Something changed right here. I might want to go back and check the date, but something happened around here that made Target really bullish looking. And for me to play this, I wanted to see it now that I know the charts and stuff right here, I wanted to see it hold 80. So that's my risk reward right there. If I take a position today at 84, my risk is $4, and my anticipated reward is 4 plus.
Yeah,
right?
Good numbers.
So that's my analysis on the weekly Target. It looks like there's a buyer at $80. Now, it might go down to $80 and whip around $80, maybe whip slightly below, but it looks like it wants to hold $80. Again, anticipate the indices, right? The environment's getting kind of tough. The last time we had a tough environment, this is what happened, right? This is the November, December. So if you see it dropping sharply like that, then maybe we might be having an event at a broader macro level. So Doris had a question. Okay, there was a lot of questions, but I'm sorry guys, I didn't get everyone's questions today. Yeah, we'll look at Uber and AMD and stuff as well if we can.
Is your air conditioning on?
Huh?
Is the air conditioning on in here?
I turned it on.
Is it on? It's just kind of hot here.
Oh, it's not on. Yeah.
Roku?
Say again? Roku?
Yes.
So Roku, I still have a hard time.
Buy it a long time ago, but it keeps going up for long term. So I'm just curious, should I just, when's gonna go?
Yeah. So I mean, if you ask me right now, it looks like Roku wants to go up, right? Now you want more specific. Yeah, I do apologize. The AC's not on right now, so you guys are like sweating. I did flip it on outside though. So if you ask me, Roku is pretty overbought right now, right? You see some overboughtness right here, some momentum right here. I'm looking at maybe a retracement back to 120. This level has to hold right there. So I'm seeing this and then that. But if it doesn't, then I can see it quickly going to the 50-day moving average and testing the 100 as next. So it's still in an uptrend. If you're holding it today, I think it's okay if you could handle the move down here and then up there. It's still an uptrend. From a business perspective, I can't quite wrap my head around what their business model is. I know they shifted recently to more software driven, but it's a Silicon Valley headquartered company as well, which is bullish, right? Silicon Valley tends to find unicorns, but I just perceive their market as so much competition with like Amazon, Samsung, and all that. That I don't know what the growth story is, but they're hitting growth. So from a actual number perspective, they're surprising me. I guess they really have a market for this, and I don't quite understand the market opportunity. Does anyone in here understand the market opportunity by any chance? Like if it makes sense to you? But from a chart perspective, it's going up, and just like any other software company, right? Well, I mean, they're trying to be a software company. Their margins are okay. They don't have any debt. They're upswinging in sales, which is good. There's sales expansion since 2018. It looks okay, but it is overvalued. It's not. This is a growth stock, and my view is to allocate away from growth. Or if you want to stay in growth stocks like Roku, then you have to increase your management efforts, your risk management efforts, because the environment's not safe right now. It's not the environment where you could kind of just lean back and just say, you know, that's my MongoDB position.
When you say increase your risk management efforts, what do you mean by saying?
Management risk, increase your risk management, meaning like if you know, have tighter stops. If it goes down this price, you want to get out. You want to protect your capital that you earn, right? AMD. So I'm bearish on semiconductors. I still am. I'm trying to look at that trade. So let's look at the index real quick. This is the semiconductor index right here. Again, the semiconductor index is experiencing a double top at the 120, right? So that's a double top right there. Holding onto the 100-day moving average. So it's looking very weak, and I anticipate it to go down lower. So if that goes down lower, that's going to hurt AMD as well. So let's flip over to AMD. Now, just because I'm bearish on the sector or the segment doesn't mean you know, something like an ENPH would be bearish, right? This is semiconductors, but it has a bullish story to it. So that's, as an investor, you always have to kind of extract which part is bullish and which one is the market really playing on or consuming most of. And so for AMD, I see that it is above the 100-day moving average. It's respecting that very well. I think 30 is the price that you want to consider. I mean, it could whip around 28, but 28 to 30 is your range of protective stop, I would add. Looking out, zooming out, I think it's in an uptrend. It wants to go higher. It really wants to go higher, but the sector is not bullish. The sector is getting hurt. So let's look at the sales of AMD. I do like that it's experiencing a lot of growth, so they probably have a hot product now. Can you share your view on Robinhood versus? Yes, I will look at that in a bit. I'm trying to answer everyone's question. So it's definitely oversold. You know, this is a company that's been in the market for like 20 years plus, right? Earnings is just out of control. So I don't like I mean, it is profitable, but this is not a software company where the moment it goes profitable, the markets like explode, right? This is a hardware focused company. I know you come from AMD, so you kind of know. So from a valuation perspective, a fundamental valuation is overvalued. 17 times book value. This to me is more of a fundamental short, and I just have to time it with some technicals. I'm scared to hold AMD because it's just not, it's too stretched, but the markets like it, and they're trying very hard as of most recent to hold it up. So it looks like there are some underlying growth stories in the recent earnings and stuff that I might want to look at. I want to look at their product portfolio and see what markets that they're potentially tapping into. But remember, as investors, don't forget that, you know, just because a company is saying that they're approaching the IoT, the AI, well, realize it and show us the numbers. That's when, you know, it's a lot safer. But right now, numbers are kind of stretched on AMD. But charts look bullish, I'll tell you that, until it breaks that 30-28 range. So 30 minutes left. You guys doing okay? I know it's kind of hot. If you guys want to get water and use the restroom, you're always welcome to. Restrooms out on the right, water's in the back. This part I wanted to talk about private equity real quick. Just do a quick analysis on KKR. But if you have other stocks you want me to look at, or do you guys want me to focus more on stocks? Do you guys like the private equity stuff? Or okay, all right, continue. Okay, continue. I will then. It might be because it's hot and then people are like low energy, but let's make this interesting. So, you guys like investing? I'm guessing, right? Stock market is one, but you gotta keep in mind there's other strategies out there. So, strategies I want you guys to know about, because it kind of ties into everything that we talk about in this club, is everyone knows venture capital, right? So the strategies of private equity investing. What is private equity? It just basically means you're buying private stocks. Equity is stocks. Equity means ownership, right? The real game is it's not so much in how much money you make, like 300K, that's nothing. Really, I personally think 300K is nothing. It's actually the equity, how much equity you own, right? You could pay your sales executives 300K, but at the end of the day, it's the equity that's going to pay you out big time, right? So if you ever look at executive compensations long enough, like CEOs and stuff, they're paid like 200 to 300,000, but their equity compensation is like 3 million, 5 million, 10 million. So if you kind of realize that if you work up the corporate hierarchy, you're going to get to a point where it's all about the equity and the sales that you bring in as an executive. So venture capital is just the ability to invest into that equity early on, right? You find that entrepreneur with that strong idea and you just buy the equity before anyone else. Buyout is basically you lever up, you get sophisticated financing, and you buy out the entire company. It's just a quick review. Mezzanine is just another form of it's a hybrid of debt as well as equity. It's really a debt instrument where you're giving out a loan, but then it has like equity-like features where it can convert to like shares. Special situations, so companies get distressed. What does that mean? Like people grow old, right? So when you grow old, you might not work out as much, you might not eat as much. Well, same thing with companies. Companies to me are just similar to like living creatures. They'll decay as a group, not so much as an individual. So special situation investing is, I'm a specialist in this market and I can flip this business, right? So I'll buy a distressed business and flip it. And in fund of funds, it's just I'm investing into a bunch of VC funds or other funds that are investing into hedge funds and VC funds. That kind of sets up the intro into what I want to talk about with KKR. KKR is a publicly traded private equity firm. And so I hope you guys find it interesting. But again, real quick right here is the alternative investment stuff, right? So this is basically what we are in here. We talk about private equity. We talk about hedge funds, long, short, right? Shorting a stock, going long a stock. Global macro, betting on gold, betting on bonds. Event driven, so maybe when earnings are out, that's event driven. Market neutral. I think that's not arbitrage, but just market neutral will be, the way I interpret it is more like you're neutralizing your position, right? Where you're like net long over here and you buy another security to be like neutral out. And then arbitrage, which is, I don't know, I mean, arbitrage is not really a strategy I look into. That's more high frequency trading. And then emerging markets, right? I don't know why they don't consider emerging markets as global macro, but I guess that makes sense. And then real estate, there's office, retail, residential, and REITs. And then other types of stuff. Currencies, cryptocurrencies, interest rates, natural resources.
Hello.
And physical commodities. Hey, how's it going?
Hi, can someone open the door downstairs?
Oh, could someone run downstairs? Thank you so much. Yeah. No, I guess someone wants to come in. That sounded like Naveed. So let's talk about KKR, okay? So now that you understand private equity, like, I want you guys to kind of like, I think the whole, when technology exists and it shows us how to buy a stock, we think that the only way to buy a stock is through Robinhood or TD Ameritrade or Charles Schwab. But in reality, we could buy a stock like, hey, Sachin, I love your company. Let's go get dinner, man, and I'll buy you a few drinks, and then I'd love to buy some of your shares. Right? That's the reality for like private equity managers, right? It's like, hey, we manage $5 billion, and we like what you do. What does it take to buy your shares, right? And if you say like you don't need financing, well, the guy keep harassing you or whatever. Just kidding. So KKR, it's a publicly traded private equity firm. We looked at one before. It was the Carlyle Group. There's also Blackstone, but I wanted to look at this one just to kind of give more variations and just see if it's a great investment opportunity or not. Their ticker symbol is literally KKR. And this is a very famous private equity firm who back in if you read the book or watch the movie Barbarians at the Gate, they were the ones who did the biggest leverage buyout in history. Meaning they levered up like a ton of institutional money. You guys gotta understand as well, it's like I could get everyone in here to pool money for a home. They could get a bunch of like banks to pool money to buy a company. It's the same thing. It's just at a very professional, institutional level, right? So this is their stock right here. I pulled up the monthly, so it's the bigger picture view just to show you where it's at. And they do about $3 billion in sales a year, or this could be like investment dividends, which is kind of nice. But let's get into the overview of what they do. What are the markets that they penetrate, and why is it important in our analysis? Could anyone tell me why private equity? Why would you want to analyze private equity? You guys are buying stocks. You're analyzing public equities. So how they decide to value a company privately is the same way of how you approach a stock. So they're doing the same analysis we're doing right now. How's the S&P 500 doing? Maybe not to the granular degree that we're doing, but they do an analysis like, okay, is the S&P 500 okay? Okay, if it is, then the next 10-year environment doesn't make sense for us to buy the company. So overview of what KKR does. It's a pretty cool private equity group. Just like any other structure, they have 3 segments right here. So the first segment is private markets. In their private markets, they invest in private equity, meaning we'll buy out your company. We'll buy out AMD. I'm just kidding, we can't. I know, right? And then they'll invest into growth equity, right? Equity that's like really growing, and they'll buy some of that equity. They might not be able to buy it out and take it all private, right? And then there's core. Core is probably, I would interpret it as their core as private equity. I don't know what that is. Core could be very more than infrastructure, but we have to revisit that. Infrastructure would be like investing into private equity for like utilities or whatever infrastructure company, like energy and stuff. Actually, they have energy down here. Infrastructure, real estate, and energy. So you have to pay attention here how this major corporation is segmenting major components of the market, right? They're defining energy and real estate as its own beast, right? So infrastructure, real estate, and energy, they're all its own beasts, right? So there's like real estate agents, there's energy agents, if you think about it, just like how there are VC agents. So that's the private market side, and then they got the public market side. In the public market side, they'll invest in leveraged credit. That basically means like, okay, SK is in debt up to his eyeballs, but I'm gonna figure out how to lend to him some more. That's leveraged credit right there. And then you have private credit, which is lending to private companies, and then business development companies. Again, you invest in companies that go out and lend money. And then you have hedge funds, so they'll invest in hedge funds as well. These funds are pretty sophisticated.
Sorry, what was BDCs?
Business development companies. So it's just like they're investing into bankers. That's how I kind of think of it. Global franchise. Oh, so capital markets, global franchise. So portfolio financing and refinancing, private equity and non-private equity syndication teaming up. Equity underwriting and debt, so they're issuing, so this is like the investment banking part, right? So they're issuing stocks as well as issuing bonds to the market, and then third-party capital markets. Principal, so out of all their business models, they also invest their own money. Pretty cool, right? And who do you think their customers are? Sovereigns, family offices, mutual funds. There's a big market for this, but I don't think anyone's interested enough to go and dig deep into it. I think I'll skip this one because it's might be too technical for some people. Private market investments. So this part I just wanted to highlight, like, what is private market investments, right? This is how they segment it right here. Private market capital is long-term. They invest into permanent capital, strategic investor partnerships, 8+ year duration inception, capital subject. Maybe this might not be, this is too technical. What I want to communicate here is basically, yeah.
I think the last 2018 seemed to be very good for stocks, but it seems negative. The performance, the recent PE performance.
Yeah. So, it's all, what's your take on that? Like, what's your question?
Why it declined so much even though it seemed like the investments were doing well in stocks in 2018?
So stocks could be, I'm trying to think. My thinking is that, I don't know. I just don't know. It could be, I don't know. Sorry, I was just off course there. Anyways, yeah, I don't know. I would say maybe it's just it's private. It doesn't have exposure to the public markets. They're over leveraged, holding additional debt. I don't know. That's my take on that. But what I want to communicate here is what are the activities in the private market. So moving over to the public markets, what do the public markets look like? So more specific than just saying, hey, they invest in hedge funds. They invest into leverage credit, SMAs, separately managed accounts and funds, CLOs, credit, collateralized loan obligations, and then they invest into alternative credit, hedge funds, and business development companies. So CLOs is kind of like mortgage-backed derivatives, right? Where it's like a derivative of, it's backed by real estate. This one's backed by some collateral on the loan. So it could be like an auto loan or something like that. But that's the other activity they do. Moving forward over to principal activities. And this is where they invest their own money, holdings by asset class. So again, CLOs, other credits, other investments, alternative credits, infrastructure, energy, real estate, private equity. Is this interesting to you guys? I am moving kind of quick, but I'm hoping it's something.
Yes, it is.
Okay, so the private equity industry, what does it look like? Limited partners need for investment returns. Like who would invest into a private equity? If you're a limited partner, you're basically an accredited investor. That means you have enough money to put into this investment vehicle, which is private equity. The other part that's a driver, so more rich people is a driver, growth in sovereign wealth funds. So sovereign funds like the Sovereign Wealth Fund of Norway, their funds are growing. They need this demand, so they're investing into KKR. Or they're giving their funds to KKR to manage it because they have professional investment people, professionals. Growing penetration of insurance and high net worth investors. So now they're also penetrating into the insurance industry, which also has a lot of money. And then again, it says high net worth investors, so growing amounts of rich people. And then retrenchment of banks. So banks are just restructuring their portfolio and they need investment into this space. And then shareholder activism. So that's the private equity industry. I figured this topic would be a little bit more exciting for people, but maybe not. Which part about private equity that you guys like kind of don't understand that I could kind of answer for you if you have?
Quite a few technical terms.
Technical terms? So
Yeah.
which technical terms that?
Like on the previous page, I was trying right now, but I couldn't keep up with it. Okay.
Yeah, so I guess the simplest way to explain what they have, what they do here, is it's a big company, right? It's a publicly traded private equity company. And just think of it as I'm the private equity company, and I'm gonna do 60%, I'm gonna buy companies. And I'm just gonna hold these companies and collect money. The other percentage, I'm gonna write sophisticated financial contracts. And I'm going to lend to over-leveraged people like SK. I'm just kidding, right? I lend to him. I'm going to lend to alternative credit opportunities. So it's a lot of lending. I'm going to invest a little bit in hedge funds, and then I'm going to invest into like infrastructure, energy, and real estate, right? So it's basically, to me, I would call them a hedge fund, but it's just they're defined as a private equity fund
So they
or investment company.
So they invest in the company, private equity, that means they invest in like company that's not public yet?
Yeah.
Or they buy distressed companies,
Mm-hmm.
right? The Campbell Soup Company, they buy companies that they believe they can take apart and resell for more than the parts.
Yeah. So, I mean, to me, it's interesting because a lot of my valuation analysis, like how I determine if I should buy a stock or not, comes from their valuations. So how the private equity people decide to buy a software company like Visa Equity Partners, they decide to acquire at this multiple. I'm studying them to get a feel of like what this stock should be trading at. So if this stock is trading at 10x of sales, price of sales, but SAP acquired for something for 15x, then I think this stock could go up, $5 or 5x more. One example is like Pivotal, right? They're going to acquire Pivotal at $15, and I think that's like a steal. But it's because they're distressed probably or something.
How do you find out what they're gonna buy? Do they have a report that comes out?
Press releases. So something like Pivotal, Pivotal announced in their press release that VMware is going to acquire them. So you just kind of have to be a market observer. There's not really. I mean, if you have money, you could buy like Bloomberg or PitchBooks. PitchBooks is like $10,000 a year, but you get all the private equity information. It's a lot better than my Crunchbase. Crunchbase is only $300 a year. So yeah.
Like for each part of their asset, like what's the like profit rate for
Return, I would say, I don't have that chart on here. It was on the deck. Let me see if I have it. Assets under management. Let's see. Assets under management, growth, diversification. So I was going to show you the, yeah, I won't show this one. No, I don't have the percentage return, but it's upwards of double-digit percentage. So I saw it was like 10, anywhere from 10 to 40% plus.
Okay, from the passive.
Yeah, yeah. Real quick, let me just mute this person. Okay, so how do they make their money? Simple, like the hedge fund rule, right? So management fees charge like 2%. This would be the management fee, and then the performance fee. So this tells you that if you wanted to operate a hedge fund today, you charge some sort of model like that, like maybe 1 in 10 versus like 2 in 20. But that's really the business right there. So what do you guys think of this business compared to like all the other businesses we looked at? It's just another business out there, right? What is business at the end of the day? It's just a collection of a group of people in an organization that has a mission objective to tackle a market opportunity. And what is a market? A market is also a collection of people who are not organized but behaving in a very predictable manner. Isn't that interesting? Right? A business is an organization that is formally organized to tackle a group that is not organized. Right? Right? I mean, like, think about it. Like, the market for, let's see, what's an interesting market that you could think of? The market for, I can't think of anything. But it's very fascinating. Man, I just taught myself something new. I like that concept a lot. Yeah, I'm getting a little bored on this. Their core investing, long duration contracts. So this is like their criteria for core investing, right? So what qualifies as a private equity investment? It has to be long duration, meaning it has to be long term. I'm guessing like 10 years plus or 8 years plus. It has to be cash generative. They don't want to acquire anything that's not profitable. So when we're trading stocks today, like Carbon Black, they're not profitable. They're not generating cash. They're generating sales, but not generating cash. They have to be less cyclical. We want a company that gives predictable revenue streams, right? This is if you want to be Warren Buffett's status. Warren Buffett is more like a private equity investor. More limited external exposures. That means like they have a moat, as Warren Buffett would say, meaning like something won't hurt their operations. Lower leverage, that means they don't have a lot of debt. If we're going to buy out this company, we don't want it to have a lot of debt. What's the other one? Control, always. Private equity always wants control. And then the last part is high quality management. So these are lessons that we could take away from our own investment opportunities or our own investment analysis, I would say. Like when you're screening a stock, you could look at this. Especially if you're screening a value stock. This is a nice set of rules to consider. And a lot of this taking pictures, so. Okay. And so this is their network. What was I mean, they put distribution reach, but what does their network look like? If you were to work at a private equity firm today or KKR, these are the people that they interact on a day-to-day basis, right? Just think of any company that you work for today. What type of people do you interact? For someone that's working into like IT would interact with, I don't know, the security division and so forth. They interact with hedge funds, family offices, mutual funds, limited partners, which is like investors, credit funds, insurance companies, pension funds, sovereign wealth funds, fund of funds, and mezzanine funds, and hedge funds, if I didn't say that already. So that's their network. Every business, again, it's a collection of an organized group of people tackling an unorganized group of people. Man, I gotta write that somewhere. And then, okay, so that's pretty much for KKR that I wanted to share. I don't know if you guys found that interesting, but the ownership was a little interesting for me as well. So the guy who owns the most in this company is a guy named Jeff Ubben, right? And he's here in San Francisco. He has about 50 million shares, 6% of the shares outstanding, and it's 13% of his portfolio. And the ironic part is that he runs a hedge fund. Right? So after all this talk of this private equity doing all these type of investments, right, buying out companies, this hedge fund owns a decent amount of this private equity fund in a publicly traded company. So I won't bore you anymore, I promise. We're going to make it a little bit more exciting with the time we have left. Well, we're pretty much done. But this is Jeff Ubben. I wanted to show you his portfolio is managing $9 billion, but maybe not. And he's heavily in financial services. Did you want to see his portfolio, Bernard?
For me, well, no, kind of watch.
Jeff Ubben. I'll show you his profile real quick. This is his website right here. So he owns a hedge fund in San Francisco. It's called Value Act, and this is the guy.
So just, Kane, what to me was more meaningful is what's changed, right? Not their current portfolio, but what has changed in the last 90 days in their portfolio. So
Right,
they've
right.
increased their position in X. That's kind of interesting.
So if you want what's changed,
I mean,
then,
that tells you something, right? The current position doesn't really tell you
yeah,
much
yeah.
because
So
you don't know where it came from or.
for me, I like to look at the current position because it tells me how much conviction, right? They might make a trade in the recent day, but it doesn't have a high conviction.
So last page, for example, he just put a position in Boeing. So Boeing may resolve their MAX airplane problem in November. So here we are in August, right? So do you speculate that if they were to fix it?
Wait, how'd you know this guy bought
Well, I
Boeing?
saw it.
Oh, you did?
Quick. Oh, was that say Boeing or Box? Oh, I thought that said Boeing. Sorry, my mistake.
So let's say new buy, impact 2%, new holding right here, 13 million shares. So this is a new holding right here, TSG.
Okay.
So let's take that for example, and what you want to derive like what he sees from this, right? So he bought it relatively recently. If we look at where is it? He bought it around, I don't have a date, but we have about 6:30, right? So these guys don't, trade fast, so it's not a problem. So he sees a position in this, at least within the past 2 months. And this company is the Stars Group, Gaming Activities. What is your question? Or
So what that tells you is that you're getting the stock today at 10% less than what a billionaire paid for it.
Yeah.
60 days ago.
So he obviously bought it below book value, or at least at book value.
What is TSG's equity?
No. This is a company that he bought. This is a stock that he bought. This is the guy who owns a private equity firm, a large chunk of it.
Oh, okay.
So this is a separate company that he owns. It's called the Stars Group. I don't know what they do. I didn't read their bio, but it's into gaming activities.
But it's a public company, right?
It's publicly traded. So this is his investments right
So
here.
if he bought it in June, it's gone down 10% since then. So
He bought it right here. Yeah.
right? So if you like his thought process, basically if you follow their guidance, you're getting his guidance of what would have been in June at 10% less.
Yeah, if you ask me, it's not my cup of tea for a trade. He sees something in this that I don't. I don't see it. What is what?
What is this gaming activity?
I mean,
Is it like the
buy
video
things
games
and
or
then
is it?
it's more long term, it's never
Let's see.
exact, like,
TSGS1. So what do they do, right?
data, but,
Right.
Is it the Stars Group?
Yeah.
He has a significant position, and I just want to see what they do. So April 2018, and we will go to their, about business of the Stars Group. So the Stars Group is a leading provider of technology-based product offerings in the global gaming and interactive entertainment industries. Does that answer your question? The primary business and main source of revenue is its online gaming business. Oh, interesting. These currently consist of operations of the Stars Interactive Group, which is acquired in August 2014, Crown Bet, which has acquired an 80% equity interest in between February 2018 and April 2018. So it's an online gaming group. It looks like someone else acquired equity interest, significant amount as well. So this is, again, this is, huh?
If you read the next line, it actually explains everything.
This part right here?
No, the next, the Stars Group owns and operates.
This one?
No, continue in the second paragraph.
Okay, so they own and operate gaming and related interactive entertainment businesses such as online, real money poker, casino, and sports betting. Play money poker and casino, which are delivered through both mobile and desktop applications and web. So that's basically what they do. I don't know the story behind this. It could be some other players coming in and he sees an opportunity or some growth opportunity, but it is an internet play.
Looks like it's at lowest point ever, right?
It is at all-time lows, and typically it could go lower in that case. So I would, from a technician perspective, I would still avoid this until I see some bottoming action. Bottoming action would be something like a GE. So GE has a decent amount of bottoming action, like right here, right? But I don't see that yet for TSG. But anyways, guys, it's been a long session. I think hope it didn't bore you guys too much. The only part I had left is to analyze all these stocks right here. So if you guys want to stick around and chat stocks, you're welcome to. But I'm gonna go breeze through these really quick and show you what I've come in terms of analysis. So okay, all right, you guys still want to stick around? All right, let's do it then. Yeah. I feel like the crowd is kind of tired, so I don't want to force it. So let's do it real quick, okay? I'll make it quick and share with you my analysis and how I feel about the current market conditions and any opportunities I see out there. So the first one is Pivotal. Pivotal gapped down a lot. We've been watching this for some time. Again, it's enterprise software. It's my favorite segment. But just now it's announced that it's going to get acquired, or in discussion with VMware to get acquired. So this is the market reaction. And they're going to acquire it for $15. So VMware thinks that this stock should be about $15. If you read the press release, this is what it says. VMware would acquire all the outstanding shares of Class A common stock of Pivotal for cash at per share price equal to $15. So this is something I'm not a big fan of. Like, there are a lot of software stocks that I like out there, and I want them to stay public, but these bigger guys come in and buy them out. So something like LinkedIn, right? Microsoft buying LinkedIn. Looking over at VMware, VMware is looking very negative. I think we reviewed this already, but it's more negative because they're looking to purchase. That means they're expensing. So one stock will go up, which is Pivotal. Pivotal will go up, and VMware will go down. This is what we have right here for VMware. VMware is a solid company. It's just I don't know how low it will go, but I think you guys should put this on your watch list. This is a solid company. It's down about 32% on the year. That's why it's world class. This company I know one day could be a lot bigger than what it is. Let's see what it is today. I think it's only $59 billion. This company could easily be $300 one day, easily. I just know what they're doing is really well. And then there's Dell, right? Say again? They have what?
They have competition with the cloud presence.
Yeah. The Cloud Titans or Cloud?
Well, I mean, like like AWS.
Yeah, yeah. I mean, I think that space is going to expand. Remember, if it's going back to what I said earlier today, right? Situations could get overcrowded, but situations could also get monopolized, where it's not overcrowded at all, which means there's an opportunity to get overcrowded, if that makes sense. I don't know. That's my analysis from patterns in life or economic situations and so forth. Dell breaking down lower, so a lot of big companies are looking pretty bad. NetApp breaking down lower too. So this is how I'm also looking at the underlying and seeing a lot of fear. Salesforce again doesn't look too good, breaking down at the 150 and setting up a microphone pattern right here, broadening wedge. Here's the bigger picture on Salesforce at the weekly. Salesforce looks pretty bad, even though it's a very bullish stock. Oracle revisiting the 200-day moving average. So I wanted to note this one because it had a very bullish gap up, and this is an example when a gap fails, right? When you look at a gap right here, I always draw the line right there. So if it fails that, then I think it could go lower, right? So typically, I want to see something like this go down and then bounce off right here and then go higher. But instead, it did this, which I think it could go lower now. So again, this is a software titan. We'll see how it plays out. SAP, again, in Germany, this is the same exact, almost the same exact pattern as Oracle. So it gapped up right here, and then I draw the line, and then it broke down right there. And further down it went, now at the 200-day moving average at 115. Yeah. You guys like it when I draw these annotations, or? Yeah. I hope it helps. Here's Uber, right? So Uber's been, I haven't been trading Uber, I've been trading Lyft more, but yeah, sovereigns are not feeling good right now. So if you look at the IPO of Uber, right? I know someone online asked about Uber as well, but this is the low that Uber made during IPO. We're at the low, we made a new low now. So typically new low is telling me further decline. Again, these companies aren't making money, so I'm not too surprised. But it's pretty overbought, meaning it's very extended down here. It could sharply rally a little bit right there.
You oversold.
I'm sorry, yes, oversold. So it could sharply rally a little bit, maybe back up here to 36 for those traders out there. So this might be a trade up to 36. But after 36, I'm anticipating probably further downside, looking pretty bad. Same thing with Lyft. I exited my position, right? It was looking bullish with a reverse head and shoulders, but now it's just declining further. I think this could go lower to maybe 50 50, if it breaks 50, and then all-time lows.
Can I just ask you, why are these companies losing money? I mean, they have no inventory, no cars, no nothing. Is it just they're subsidizing the revenue stream?
They could be
losses,
yeah.
or what?
If you dissect the revenue stream, they could be doubling down on marketing. Because
that much to have a $3 billion loss?
Facebook spends billions of dollars on marketing, right?
So that's incredible.
Yeah, we can look at those numbers real quick as well.
Because they're charging their costs.
Yeah, their margins aren't good either.
Their AWS cost is the biggest expense for the network.
So let's see real quick. Let's look at the financials. I want to see how they're spending some of their.
Astronomically high, the SG&A.
So revenue, let's say in 2018 they made this much. Cost of revenue is a lot, right? But we want to know what cost is. But operations, support, sales and marketing is about 800 million.
That's amazing that they're almost spending $1 billion in SG&A. Doesn't everyone know who Uber and Lyft are now? I mean, it's hard to believe that they need to do it.
Yeah, I mean, you'd be surprised, right? I for anyone who hasn't run a business or done marketing, I challenge you to try to do marketing. It's a fascinating game.
Not worldwide, right? Not that well known worldwide.
Yeah, like getting people to see your brand and be aware of your existence is it's an art. It's definitely an art. So that's Workday. Workday's looking pretty bearish. I'm sorry, Lyft. Workday broke down. I like Workday a lot. It's a big corporation in Pleasanton. It's testing the 200-day moving average right here at the 180. So I'll continue to watch that. So going back to Slack right here. Slack is a very bullish company, but not so much on the charts. I like Slack, and remember what we said. We're waiting for Slack to give us a strong signal. For now, it's only 15 billion. I think this company could become a very powerful company one day. Judging from its global reach, or like some of the people around the world.
If you buy Slack, why would you buy it?
If you had to buy Slack, why would you buy it?
Where and what price?
Oh, if I were to buy Slack, let's measure it. Let's measure how much of a decline since IPO. This is a very hard one because they're not profitable. I think it's a great price already, but it's currently down about 30% since IPO. So it's 30% cheaper. But again, when you IPO, it's always expensive. So it's trading about 34 in this market with that market segment. I would say this would be attractive at about $15, 15 to 20. I think the market will allow it to go to 20. I think 20 is very attractive for
When it go down to 20?
yeah, when it goes down to 20.
Oh, okay.
Yeah, but 20 might be a stretch, right? I'm seeing 25 is like a starter, but 20 I think is a good price in terms of current valuations, right? Because I think current markets are trading at realistically current markets are trading at 15. So if it's 15, then it'd be about half the price of this. So $15 more realistic. 15 to 20 is more realistic if you want to get current market prices. 15 to 20, right? But judging from the markets, and it's already down 30%, it's public markets, it's going to be hard for the markets to allow it to go below 25 maybe. But I like this one for an aggressive growth in the long run. This one's a must pay attention to because every enterprise software person I talk to, they speak very well of this technology. Every VC speaks well about this product. I use the product as well. It's pretty good. It's not bad.
But the PS mean price to sale, is that high?
Price to sales.
Is that considered high?
Yes, 34 is high, and this market is about 15 to 20.
Oh, okay.
Realistic, I mean, this is enterprise software. It's also consumer. In this market, it's about 15, but for this one, I say 20 makes sense because it's consumer and enterprise. This has the best of Facebook and Salesforce together, if you think about it. Because there's a consumer use case, which people are using it for small projects, but then organized enterprises are using it too for entire corporations. So I think this has the best of both worlds, and so I would add the valuation instead of 15. I'd probably go with 20. So at 20, what would the price be? It'd be like $20, 20 to 25. That's the range I'm seeing.
So you take the PS to the number, or do you take the price divided by the sale?
Yeah, so the price of sale is 15 billion divided by 454 million.
Oh, the market value.
Yeah, P is always the market value.
Okay, got it, thank you.
And this is just a quick and dirty way to look at the financial statements, right? So for those of you who are accounting majors or have accounting degrees, you would go here and look at this, right? But someone like me who has been looking at it for a while, I just want the quick numbers. I just want to know what multiple it's trading at. So I look at this. This is my quick snapshot. This whole thing right here tells me whatever happens on the balance sheet in income statement. It's just a quicker way. So software companies are easy to evaluate because they're so lean. Right? You don't have to like think about inventory overbuild like semiconductors. Semiconductors, one of the major KPIs is actually inventory overbuild. If they have too much inventory, they're not doing sales, and that's a little concerning. And so that's what I'm seeing for the short semiconductor investment thesis.
So it is getting renewed competition from Microsoft Teams.
Microsoft Teams is I don't hear it among consumers, right? Consumers are spreading the words.
But enterprises
Enterprise uses Teams.
They do, yeah. Enterprise uses it.
and they're forcing it down.
Yeah.
Everyone in the enterprise.
They're forcing it down, as in.
Microsoft, because they can bundle it with their other products.
Yeah. So the way I see Slack today is like real estate agents are starting to use Slack. You know, it has a very wide reach, and I like that because it's removing the cost and friction of marketing. So if you go out there and do marketing, I actually have an advertisement running right now on Instagram. It's to promote the mixers, right? And I'm paying like $90 or $100 a month to hit a very specific crowd. Anyone who likes like AI, enterprise software, machine learning, and spending like $3 a day or $5 a day, whatever. It's only hitting like, I think 80 people a day. Not that many people. But it's like very targeted, right? Because I want to build out this network.
Wouldn't this be on your list of overvalued companies?
This is definitely overvalued by about 50%. I like this at $15 to $20. It's overvalued, but this is also on the list of must-have technology.
Absolutely, but
right?
It's like is it worth buying a company worth $15 billion with losses and no increase in profitability seen, right? So it's a very speculative buyer beware type company.
Yeah, I mean that's why if you're a software analyst long enough, you kind of know how the space is playing. The space is really playing on fluff. The game is fluff right now. It's you know, everyone's thinking like, oh, it's making the sales. We'll get the earnings later. But when a recession kicks in, it's going to be back to profitable and high selection type of stocks. You just can't do that. That's why I think it makes sense to double down now on value stocks, because when they start printing money, these value stocks will appreciate. So that's where I see the opportunity is at. Because right now, when they're printing money, right? If they're printing money, why isn't this going up? Right? If you look at my list right here, the concern is, well, if they're printing money, why isn't Oracle going up? It's still uptrending, but not aggressively. But Salesforce is breaking its uptrend right now. It's below the 200-day moving average. The 200-day average is flat, below 150. Salesforce is starting to downtrend, early stages of the downtrend. So my question is, why isn't this printed money helping growth stocks? Right? Uber is a growth stock, but printed money is not doing anything for it. It's overvalued. So I think the printed money will go to value stocks, and value stocks will come back with vengeance.
I'm just overall concerned, by the way, that in July and August, a large number of high-value brand companies that appear to be overvalued seem to be in decline. It seems like August is going to be another.
Yeah.
If there's more noise about the economy or whatever.
So I said September, October.
Yeah.
All right, I'm getting defensive next week. You know my thesis already, and I'm adding to my gold positions.
Right.
When you said you believe in the value stock right now, is that for short term?
The valuations, when I look at the valuations.
No, you said value stock instead of growth stock.
Oh no, value stocks is pretty much long term.
Oh, okay.
Right? Stocks are just beaten down like Occidental Petroleum. It's like trading below book value. It's solid. It's profitable as well. But these software companies are not profitable. But the compelling part about software companies is the ability to invest into a highly scalable business model that's dominating the data space.
So you could put your money in like a McDonald's. McDonald's, even when the economy's awful, people go there, right?
Yeah.
So it's not like it's like a Zendesk that suddenly the stocks can go down 25% because people are failing. But even if the economy tanks, McDonald's isn't going to go down 50%, right?
My question is when you say that you're cautious about growth stock like this, are you just cautious for short term?
No. I'm cautious probably till the end of the year. Yeah, I stay away from growth stocks right now. So the only growth stocks I'm looking at is like Carbon Black, because it's so tiny that acquirers could go in and buy it. Pivotal's like what, 1 billion, 3 billion. Any acquirer could go in and take that company, which they are. So I still like software, just not the big software right now that I'm usually playing, like Salesforce. It's heavy. It's looking very heavy.
Zendesk, you will consider growth?
Zendesk is pretty big. I think Zendesk is 30 billion in market cap. So let's look at that real quick. Let's see. So this is Zen right here. It's 8 billion in market cap. Again, look, there's no profitability. They're not taking home any money, but they have thick margins and parabolic sales. That's the typical profile of a software company. They say 80% of software companies look the same, right? And if you know that, you could easily invest because it's a repeatable process. FireEye, I do like, right? From an acquisition perspective. So if you buy this, don't expect it to go up right away, but you could expect it to get bought out. Yeah, so I like FireEye because it could be a Cisco acquisition because Cisco needs the growth right now. Nutanix, I like Nutanix as well, but it's going through a phase right now, a very solid downtrend. So just watch this, put this on watch. Xilinx double top right here, sort of, holding the $100 mark, but below the 200-day moving average. Autodesk below the 200-day moving average. Autodesk is pretty big as well. So you see a lot of these big software companies are just kind of pushing down hard right now, and I think it's going to leak into the other segments. Intel, gap down, reverse about more than 50%, barely held 50%, and now lower. I think this could go lower. Beyond, so Beyond now is it's initiating the short. So now I feel comfortable shorting it. On a bounce, I think it go back to 160, and I want to see this area act as resistance for it to go down further. You see how the 200-day moving average is acting as support for Beyond? And then here's Oxy right here. This is a value dividend play. So this one's trading at 0.9 book value, if I recall, and paying 7% dividend. I think the dividend might be able to hold it up. It's also rolling in $1 billion in sales. And sales have been growing the last 3 years for Oxy. And ENPH, again, as it would play out.
What is that? What are they?
ENPH is the semiconductor company related to providing solar panel related technology.
Oh, okay.
Yeah. So this one is a smaller cap. It's we looked at the financials 2 weeks ago, last week. It didn't make any sense, so I narrowed it down to it has to be something with a product. So it's a hot product. Again, I didn't do my super due diligence on it.
In when I was doing my startup, I was competing with them.
Oh, you were?
Right. To me, it still doesn't make sense. Their product doesn't make sense.
Yeah. Really? That's amazing.
That's it.
We could talk more on that. I have some short ideas, but this is more advanced. Yeah, that's pretty much it. I was going to go over this fraud report. It wasn't much. So you guys know the biggest news this week was the GE Enron news report. I won't say much, but the guy who announced it is the guy who called out was it the Madoff guy, the Madoff guy, who did the pyramid scheme, right? But yeah, Ponzi scheme. But this is from Citron Research, which is way more credible in my opinion. I don't know that other guy too well. He identified something simple in my opinion. That pyramid scheme or Ponzi scheme is just, I didn't think it was that hard to identify. But Citron Research took the opportunity to buy GE, so did Stanley Druckenmiller, CEO GE Larry Culp bought about 5 million shares total now. Yeah, see how my question to you, and we're gonna end it right here, is how do you as investors deal with like the complexity of the markets when you get a report that's released, a 175-page report, you want the link, let me know, a 175-page report on GE, revealing all the bad stuff, but then you have a world-class hedge fund manager, Stanley Druckenmiller, buying GE. How do you as investors deal with that, and how do you interpret and invest? We'll end with that today. It's a long session. Probably won't revisit private equity because you guys aren't entertained by it. we could, but we'll make it more exciting. So that's something to keep in mind.
Bigger protections in case things go wrong or south as compared to a retail investor.
Who has protection?
Like Dr. Miller or
yeah, they do.
They have bigger protections as compared to retail investors.
Yeah, realistically, Larry Culp's $5 million position is only like 5 of 215 million of his net worth, right? He doesn't really. It's not that impactful, but Yeah, this is an interesting report from the CFA. I don't know, I can't quite trust the guy yet. But if you want to read the report, this is it right here. Sure.
Price down and then, you know,
And then it went back up?
yeah, one back up.
Yeah, that's the normal reflex of a stock, and you guys have to understand, like here, I'll draw it out right here. I mean, George Soros has the concept of reflexivity. I still don't understand it too well to this day, but stocks will go like this, right? It'll have its normal state, and then sometimes it'll gap down like that. A gap down like this will always retrace a little bit, right? And we could measure that retracement, and I'll show you earlier today, 50%, 75%, 25%, right? If it's 50%, then it's like maybe sideways. The continuation will be sideways. If it's 75%, then there's a good chance that it will recover 100%.
Thanks, Kate. I gotta run.
Hey, no
See you
problem.
next week.
Thanks so much. But then if it gaps down and remains low and starts just going like that, then that's pretty bearish. It's telling me that something is happening with this company. I want to avoid it. But GE did about something like this, 50% retracement. Yeah. All right, guys. Long session. No, you're welcome. I want to keep pushing the knowledge, so I'm gonna put in more effort to make it a lot more exciting. I'll figure it out somehow. Because what can I teach you if you know it all already? Yeah, but you guys can hang out, chit chat. Let me know, or if you have any questions, feel free to swing by and yeah, shoot a message. People online, I do apologize. Didn't get to answer everyone.
No, let's the three of us are
You like the position, or
Yeah.
yes.
Do you want to do it right?
No,
AG,
I
take a
think
look.
go.
sure? AG sounds like gold, or yeah, that's
Silver. It's actually
AG
introduced.
AG is not.
Yeah, it's silver. Our first, whatever. Yeah.
AU is gold.
So the one
I
I'm
like
playing,
gold, but the gold is
the one I'm playing in the silver segment is Hey, thank you too, Rakesh. The one I'm playing is this one. This is my favorite one right
Actually, I like it, but
here. Yeah, AG looks good. I like AG as well. It broke down the 20-day moving average, so it might be a little concerning. I know silver is kind of heavy. I mean, if you're long term, you're okay in my opinion. But it could.
actually, I'm trying to buy it at like $9.90.
Yeah, it looks
On
like it wants to
Monday.
go to $9, maybe.
Okay.
Yeah, slight
Right.
retracement to $9. But this company.
Trade at $9?
Price
Okay.
So the trick with these minor companies is the one that has the best ore bodies, really. The ones that have the best mines.
Right, they
The
it
high-grade
seems
mines.
Like they have some production. So.
Yeah. I mean, and if they don't, the whole
What about-
sector is rallying, so you can't go wrong with the whole sector rallying.
Yeah.
Yeah, that's the other thing. Yeah. Do you have another?
I think the gold price is overpriced right now, right?
Yeah, gold sentiment is very high. It's a little bit oversold. It's been going down a little bit,
Yeah,
but
it's been going down
it
fast.
needs to go down a little bit. I mean, there's plenty of time to get in, right?
Yeah.
If you're patient, let it go down to maybe 135 and then consider it. I think 135 is probably possible. Yeah. But the bigger move is it's not there yet. I feel.
Not there yet?
No, it's only like 1/10 of the move, man.
Okay.
That's how I feel about it.
Okay.
Check NVC.
NVC?
NVEC.
That's not very perfect.
NVEC, semiconductor specialized. So I'm bearish on semiconductors. If you ask me, the charts look very bearish. I think it could go down further.
Long-term trend line. Just
So
go
on the,
monthly.
yeah, on the monthly, I think it could go to 80 and then probably go lower. It looks like it wants to go lower. A lot of people were selling out right here in this month right here, as well as this month. So 2 months of serious selling, and you can kind of see the pattern right there. What I'm taking away is sales are in decline. That's very bad. I know semiconductor sales are declining. There's no growth story for this. Valuation-wise, it's 4 times book value. So yeah, this could go lower. This could go down to $50, I feel. Semiconductors, just I'm quite bearish. I don't see. I mean, I do like that there's no debt. I like the dividend. I think the dividend could hold it up. So maybe not 50, maybe 60.
How much is dividend? What did they say?
Dividend is 6%.
6%. 6% is pretty good.
Yeah, but I mean, in an environment where they're losing sales, they might cut the
What
dividend.
about the
So,
TRP? TRP also has a very good
TRP.
TERP.
TERP.
I think it was black, sour, black tea.
Second? This
Yeah,
one here,
some-
Terra.
Yeah.
Let's see. This one. This one looks good. Most recently.
Yeah, actually, very good recently.
Yeah, this one looks good. Since the beginning of the year, this one looks really good. I just don't know what they do. Oh, it's utilities.
Yeah,
Yeah.
utilities.
So this is like a defensive play, right?
Yeah.
So, oh, this is the one that Bill Gates is behind.
Yeah.
Yeah. Yeah, this one looks good.
They also invest in sellers as well.
This one looks really good. I mean, I like the background of it. I like that Bill Gates is a part of it. I just need to understand it a little bit better. What's the business model on this? If you don't know, I can pull it up.
I don't know.
Let's see.
I was looking at it.
Let's see what their business is.
They have a very good dividend as well, like 5.5.
Our business objective is to acquire high quality cash flows primarily from owning solar generation assets serving utility. Wow. So this is a acquisition company. Immediately prior to the completion of offering, we are a dividend growth oriented company formed to own and operate contracted clean power acquired from Sun Edison and unaffiliated. Wow. Our business objective is to acquire high quality contracted cash flow. This looks like an ETF. Commercial, residential, customer. Over time, we intend to acquire other clean power generation assets, including wind. Okay. So it's acquiring anything that's clean energy related.
Yeah.
To hold under its holdings company, I guess, called TerraPower. We believe the renewable generation segment is growing more rapidly than other power generation segments. This sounds pretty solid. I like it. I like it because one, Bill Gates is behind it. It's targeting a very niche market. It has a plan. Let's look at the sales. I want to see the financials real quick. Net income. So they're not. Yeah, might not have the money yet, but 250 million. Let's see. This is the income statement. Acquisition. So yeah, they're just acquiring companies. They're not so much in the business of. They're an investment company, and Bill Gates money manager. What's that guy's name? Michael Larson. So Michael Larson, Terra Power. So these guys. So Bill Gates is known to make his money from this guy named Michael Larson, right?
Yeah.
And they're also known to buy businesses like the DoubleTree under an LLC name so no one knows about it. So they tend to do that. So I'm thinking does Michael Larson, the money manager, have interaction with TerraPower? Okay. If they do, then you kind of know. But I would have to do research on that. So energy, yeah, I mean, it seems pretty solid. I like it.
You got the sales data? I didn't see the sales data yet. I just see the operation cost. Just now you showed the income statement.
Right. Shoot, where's my... I mean, there's that data, or you wanted to see the...
sales,
yeah.
Yes, sales income.
Yeah, net income, they're at a loss.
They're a lot.
And
Because the operation cost is pretty high. Operation cost is right? So,
I want to know what the market opportunity is. So let's see, industry, business.
That's why they have such high operation expense. Because they're acquiring lots of other company.
What? So this is what they're seeing. Clean power sources, including hydro, electricity, well, natural, and expected to account for 70% of the new power generation capacity added globally from 2013 to 2020. Didn't say anything about uranium. According to this represents 5.6 compound annual growth. So this is the energy supply. So I'm just trying to understand, like, what is the growth opportunity behind this? The offering, shares of this, risk factors, use of proceeds. What are you going to do with this? Probably buy more stuff, purchase additional. acquire newly units of. Okay. Yeah, so they're trying to just acquire more companies with the IPO.
Yeah, and that probably the operation cost too high. I believe.
It's a problem, you say?
Yeah.
Yeah, that's why I'm trying to look at the growth story. I'm not looking at expenses. I'm looking at the revenue growth story.
The thing is, the cost is too high. I mean, it's actually cut their growth ability afterward. Because yes, there is growth, but your operation cost is too high.
Yeah.
Then you cut your.
Yeah. So I mean, I like it, and because I can't give you all the information right now, I'd say play this with. I'm gonna play with limited information. I like it for as long as it could go up, but maybe at 16 entry. But it looks good since the beginning of the year. So I need more. I need to do more research on this one. Yeah, 3 billion. Gross margins, utilities, diversified utilities. I kind of see what they're doing. I like it. It looks like dividends will increase too, maybe.
Yeah, that's their business model. That's the point. I mean, cut their opportunity.
Yeah.
The problem is don't need that much to sell.
Yeah, I need to understand it better.
He's a very helpful guy. I'm saying good things about you.
Wait, why? Why you say?
This is his first time.
Oh yeah?
I'm selling.
Hey, thank you, man.
Sorry,
Huh? Hey, no worries.
I'm selling you and your group like investment.
Oh, you don't have to, man.
Ask him
hey,
anything.
Nice to meet you, man.
Nice to
Okay,
meet you.
yeah.
Thanks for the.
Yeah, it was a little tedious session today for some people, but
Oh, it's good.
yeah. Okay, thank you.
We were talking about like last 2 years market was kind of like flat, 200
Yeah.
moving average.
Yeah.
But did you observe like expanding wedge and